Hello and Assalamu alaikum everyone. A very warm welcome to the Advanced Audit and Assurance Webinar to Success for December 2021 exams. I am your tutor, Kashif Kamran. Today is the second day of the webinar to success. Let's see what's the agenda for the day 2. And I hope you all had a fabulous day 1 yesterday. Let's move on to the agenda for the second day of this webinar to success. Okay, now in terms of the agenda of the webinar to success for the second day, we will be focusing on business risk today and the risk of material misstatement. So that will be the agenda for the day 2. And not just the business risk and the risk of material misstatement, we will be discussing a lot of tips and techniques, the marking scheme, the examiner reports, the examiner criticism. So by the end of the next 3 hours, you will have a very sound mindset on business risk and the risk of material misstatement. So let's start on with the proceeding of the day 2 of this webinar. So right here, we are on the agenda. I hope everything is in the orderly manner. You can all hear me and you can all see me and you can see the presentation in front of your screens. Just before we start on with the proceedings for the day 2, where we have a very, very important agenda, which is risk assessment. Okay, thank you so very much for confirming that everything is in the orderly manner. So let's start on with another day of this webinar to success, and let's start on focusing on this very important topic, which is risk assessment. Now, in terms of this topic today, first of all, you need to be very watchful that in my previous webinars, I've given the hyperlinks of the webinar so you can easily click on them and reach. You will be getting these presentations on the WhatsApp group. The audit risk and the risk of material misstatement. I would particularly refer all of you to watch my March 21 and June 21 webinar. I've given the hyperlinks of that, particularly in the June 21 webinar, how you should use a spreadsheet in a computer-based exam. So if any student is worried about the usage of the spreadsheet and how would you go about using the spreadsheet in a computer-based exam, is there a need of using a spreadsheet in a AAA exam? So every concern of yours will be mitigated from the June 21 webinar. You just need to click on that hyperlink once you get the presentation and you will reach the desired webinar. For the business risk, I would recommend that you do the December 20 webinar and you do the June 21 webinar for the business risk. So you have ample resources alongside this webinar to success, which will polish you up for audit risk, for risk of material misstatement, and for the business risk. I hope you're all clear on that, right? So please ensure you make a timetable, just I guided you yesterday, watching the previous webinars, because watching the previous webinars is extremely important. Now, I will be focusing on a few very important things in the webinar today, particularly about the topic risk assessment, because in every webinar of mine, I do this topic because this is such an integral topic of your AAA paper. Question number 1, and every time in the question number 1, because the question 1 is set at the stage of planning, you need to get a question on risk assessment, and you need to be very strong on risk assessment in order to secure a pass in a AAA paper. So let's start the journey and let's start another discussion on the same topic, risk assessment, which has been covered in every of my previous webinars. Now, this is what I plan to do today. 2 articles which I will suggest you should be reading. I did made you realize the importance of reading articles yesterday on the day 1. Exam technique article part 2, which is about risk, and exam technique article part 3, which is about accounting issues. You need to read that. I hope I have given you the hyperlink from where you can access these articles yesterday. Then I will be discussing the analysis of the examiner do's and don'ts, what examiner like and what examiner don't like in terms of writing an answer on risk of material misstatement and the business risk. I will be looking at the question number 1 for the December 18 exams. And I will be drilling that out for business risk and risk of material misstatement. And I would assure that we keep a very strong focus on the syllabus changes D1 and D2, which I was discussing with you yesterday. So we will be very focused on a dashboard results, that if the results comes in the form of a dashboard, what will you do, which we were discussing yesterday on the day one. And if the examiner use a terminology, significant risk of material misstatement, how would you go about telling examiner the significant risk? What order you should follow in the exam for significant risk of material misstatement? So I would be incorporating that as well. So don't worry about it. And then your home assignments will be complete the question that I am discussing with you in the session today, and do watch the previous webinars. Now, just before I start my agenda, let me take on my Word file. Please confirm you can all see the Word file in front of your screen now. Let's look at the learning objectives today. Now, from the day two, what will be the learning objectives? The learning objectives today, so you know what would you get out of the day today. The first learning objective definitely will be that you will be getting a guidance on risk of material misstatement. You will be getting a guidance on business risk, guidance on business risk. You will be getting the guidance on the marking schemes and examiner criticism. You will also be getting the guidance on using the practice platform, and every day we will be doing that. Using the practice platform, I will not be using the practice platform for the whole session today, but every day, day 2, day 3, day 4, and day 5, I keep some time on the practice platform. So over the next 4 days, you will have an excellent knowledge of the practice platform. So every day, starting from today, you will learn about practice platform. You will learn about the tips and techniques about the practice platform. So when we wind up the webinar on the day 5, you will have an excellent approach towards the practice platform. So every day we'll spend some time on practice platform starting from today. So using the practice platform, right? That is important. Then going into the syllabus changes, I'll be discussing in context of the December 18 paper, the syllabus changes, D1 and D2. I will be guiding you about significant risk and how would you go about significant risk in exam paper, and how would you go about results presented in dashboard. That is the 2 things we discussed yesterday. I hope you agree with me. Is everyone clear with 6A and 6B? Did we come across that on the day 1 yesterday? If you did attended the day 1 yesterday, right? So I will be focusing on how would you evaluate a significant risk? What is the order? What is the order of evaluating the significant risk? In what order should you present your answer? I hope that is a very important question for all of you, right? Right? Everyone must be having a question, how to go about significant risk in exam paper, right? Which order to maintain for significant risk? And presenting results in dashboard. If you get results in a dashboard form, what should you do? How should you interpret the results? So we'll be focusing on that as well, right? So these are 6 learning objectives today, and I hope you will thoroughly enjoy each and every one of them. So let's start the proceedings on the learning objectives. I hope you're all excited about these learning objectives, right? And getting answers to these learning objectives. Let's go one by one into each one of them. Now, first of all, if I move back to my presentation for some basic things, just to make the mindset very clear, when you look at the risk of material misstatements, right, in the context of your AAA exam paper, you must be assured that this is very, very important. Now, when you look at the formula, you know there is a technique known as audit risk, right, in the exam paper. Examiner do ask you a question, evaluate the audit risk or evaluate the significant audit risk, right? But there is another exam technique. You do get a question, right? You do get a question on audit risk, right? But you also do get a question on ROM, risk of material misstatement, right? So first of all, you should technically be clear about your answer. If you are answering an audit risk question, so in an audit risk question, you are answering the ROM as well as you are trying to find a detection risk from a case study. So what extra you are doing in an audit risk question? The extra you are doing in an audit risk question is to identify from the case study a detection risk, which must be one, maximum one, as per my prior relevance of the paper. Maximum one in the whole case study, or in some rare cases two, not more than that. So when you're answering an audit risk question, primarily what you are answering, everyone. In an audit risk question, primarily what you're answering, detection risk or ROM? Definitely ROM, right? Is detection risk a major part of your audit risk answer in an exam paper, or a minor part? Minor. But what is the major part of an audit risk answer? ROM. And if you get a question on ROM, as we are doing today, evaluate the risk of material misstatement, question mark. Then are you evaluating the detection risk? No, because ROM means ROM. So audit risk is broader, right? Audit risk includes ROM and the detection risk. But you need to understand that detection risk is a minor part of an audit risk phenomena. Clear? Everyone clear about it? So as a student, if you are attempting a question on audit risk, or as a student, if you are attempting a question on ROM, you should be strong on where? You should be strong on detection risk, or you should be strong on ROM to pass a question on audit risk and to pass a question on ROM. So what is the strong element in this formula? ROM. So if you are technically clear on ROM, can you attempt a question on audit risk? Yes. Can you attempt a question on ROM? Yes. Detection risk is a minor part. Leave it out. You can watch my previous webinars for that. So my focal point today is ROM. And what is the constituents of ROM? ROM consists of what? ROM consists of inherent risk. Look at this. ROM consists of inherent risk, and ROM consists of the control risk. So two constituents of ROM in the exam paper, right? So inherent risk and control risk together is equal to what? Inherent risk and control risk together means what? Means ROM. Very good. And ROM and detection risk together means what? ROM and detection risk together means what? Audit risk. Wonderful answer. So I hope within the 5 minutes, you've got the refresher of an audit risk and you got a refresher of ROM. Is everyone clear with ROM and audit risk? Right? Good. Very good. Right. Now let's proceed with the very first phenomena. Back to the word file. And we're discussing the very first thing today, which is ROM. Is everyone clear with the terminology ROM? If I use the short terminology ROM, is everyone clear with it? Okay, just let me put it down here in front of my word file. Number one, let me put ROM here as well. So when you look at this word file, you know ROM stands for risk of material misstatement, right? Okay, let's start with ROM first. Now, try to understand this very carefully. Now, when you look at ROM, risk of material misstatement, right? Which is consisting of the inherent side and the control side. Now, when you look at this terminology, inherent risk and control risk of material misstatement. And you know, this risk of material misstatement consists of number one, inherent risk, and number two, control risk. So you should be familiar that the article and the changes which have come in the syllabus area D1 is hitting the inherent risk. If you look at the changes coming in, the syllabus changes D1, which we were discussing on the day one yesterday, syllabus changes D1, and the new article of the examiner, risk and understanding the entity, which I highlighted yesterday. Now, when you look at the syllabus changes D1, the syllabus changes D1 tells you upper spectrum of inherent risk, or the syllabus changes D1 tells you significant risk of material misstatement, significant risk of material misstatement, or upper spectrum. That is a proper terminology, right? Upper spectrum of inherent risk. So ISA 315 has been revised, and ISA 315 is telling us that there is an upper spectrum of inherent risk, or there is a significant risk of material misstatement. So you need to understand what is an upper spectrum of inherent risk, number one. What is a significant risk? Now, by definition, I hope you're all very clear on the definition of an inherent risk, right? Inherent risk means a susceptibility of an account balance to material misstatements, assuming there are no controls. We know inherent risk means something by default, inherent, something which is an integral part of the financial statement, integral part of the financial statement, inherent. So when you look at the terminology inherent, inherent means by default, inherent means something embedded in the financial statement, or inherent means something by default in the financial statement. What is by default in the financial statement? What is inherent in the financial statement? No, what is inherent in the financial statement? What risk is inherent in the financial statement? You're giving me examples. What risk is inherent in the financial statements? Risk of window dressing, risk of window dressing, risk of massaging the figures, risk of massaging the figures, risk of management massaging the figures. Do you believe window dressing is a default risk in the financial statement? Do you believe window dressing is an inherent risk in the financial statement? Whether you understate the liabilities, or you understate the expenses, or you overstate the profit, or you overstate the assets, is that something by default? Every management do it less or more. So management manipulate the financial statement. That is the inherent risk. And there are so many ways, right, to manipulate the financial statement. Right? Is everyone clear with this layman discussion of inherent risk? Because this is not a classroom. This is just a webinar to success. We just need to focus on the important things, right? So upper spectrum of inherent risk. Now, this is a change, right? This is a change in syllabus D1, and you should be aware of it. Though I recommended you to watch my YouTube video for that yesterday on day one. I hope you've watched it, but just trying to give you a summary. What is an upper spectrum, or what is a significant risk? Now, significant risk are the ones which are either what defines the upper spectrum, or what defines a significant risk? Let's put it this way. What defines the upper spectrum or significant risk for the auditor? What defines the upper spectrum or a significant risk for the auditor? Anything. What defines the upper spectrum or significant risk? The following properties are important to pick a risk at upper spectrum, or a significant risk in the exam paper. Look at this. The following properties are important, right? The following properties are important for the auditor to pick a risk at the upper spectrum or a significant risk. Now, ISA 315 revised is telling us this is how you pick up a significant risk. This is how you pick up a risk at an upper spectrum. How would you do this in exam paper? That's a different story. But how would you pick up? As per the ISA 315 revised, this is how you go about it. ISA 315 revised. Number one, complexity. Number two, subjectivity. Number three, uncertainty. This all increases the inherent risk. This all defines a significant risk. Any account balance which has complexity is at the upper spectrum. Any account balance which has subjectivity is at an upper spectrum. Any account balance which has an uncertainty is at the upper spectrum. Any account balance where there is a change from the last year, a change from the last year will be at the upper spectrum. I'll give you examples, right? Management bias. If there is a management bias, then that is an upper spectrum risk. That is a significant risk if there is a management bias going on in the case study. Fraud risk factor. If there is a fraud risk factor, then that will be an upper spectrum of risk. That will be a significant risk if there is a fraud risk factor present in the case, of fraud risk present in the situation. Now, I'll give you examples of the fraud risk factor, right? Or management past history of bad practices. You're reading a case study which tells you management has a past history of bad practices. That will increase the risk to upper spectrum. That means the management integrity is doubtful, and management lack financial expertise. Management lacks financial expertise or financial skills. Suppose the management don't have a very qualified finance director, or management don't have a very qualified accounting department. Now that also increases the risk of material misstatements in the financial statement if management lacks financial skills and expertise. Now these are examples of the properties given in the ISA 315. And these properties are very important for you as students to know. And you should read the examiner article for this. Now, I'm giving you exactly the answer from ISA 315. Now think, when you're looking at a case study in the past papers at home, so many times examiner gives you something complex. Complex what? Complex accounting treatments. Complex accounting treatments. There are so many accounting treatments which are complex. For example, actuarial valuations, IAS 19, employee benefits, very complex accounting treatment. Deferred tax, very complex accounting treatment. Share-based payments, very complex accounting treatments. Impairment is more subjective, right? So there are so many accounting treatments which are complex. So complexities, exactly, very good answer. IFRS 9. IFRS 9. I did recommend in an article yesterday, right? Risk and understanding the entity on this, right? So when there is a complex accounting treatment, will that increase the inherent risk? Will that increase the risk that the management might use the wrong accounting treatment in preparing the financial statements? Everyone? Yes, IFRS 15. IFRS 15 is a very complex accounting treatment. Subjectivity. Subjectivity like what? Subjectivity like estimates. So estimates at a very high risk. Estimates is a very significant risk. And there are so many estimates in the financial statements, right? Example, provisions, fair value, they're all estimates, right? Value in use, when you make the recoverable amount for impairment, value in use, these are all estimates. So estimates in the financial statement, right, are very, very important. Uncertainties, future, foreseeable future, like the going concern. Now, we know going concern is very important. Going concern is the fundamental basis on which you prepare the financial statement. And if the management is foreseeing the future wrong, the company is not a going concern, but the management says company is a going concern, because that is uncertainty. So uncertainty is to do with going concern, right? Do you believe going concern is a risky area of the financial statements? Do you believe management normally manipulate the going concern? Management normally hide things pertaining to going concern? I hope you all agree with me, right? Right? Okay, changes from the last year, right? Like a change of accounting policy. If the management has changed an accounting policy, the auditor will question why. What if the management has changed the policy to manipulate the financial statement? A change in accounting policy should be looked very skeptically. A new accounting system introduced. Management has introduced a new accounting system for the first time. Change from the last year. Very good answer. Recent listing of the company. These are all changes, right? All changes from the last year. Important changes, right? So if there is an important change from the last year, you need to consider that as a risky area. Everyone. Management bias, that's very common. Yes, adoption of a new IFRS. Very good. Adoption of a new IFRS. Adoption of a new IFRS for the first time. Management bias, risk that management will manipulate the financial statement. Like, for example, the question tells you management bonus are linked with profitability. Management bonus are linked with profitability. Now, this increases the risk of management bias. So you need to find from the case, are there any factors which increases the risk of management bias? Fraud risk factor. Now, when you look at the ISA 240, ISA 240 specifically tells us about the fraud risk factor. And some of the potential fraud risk factor includes number one, weak internal controls. Number two, revenue recognition. ISA 240 says revenue recognition is a default fraud risk factor. Management normally don't recognize the revenue rightly. So ISA 240 tells us that revenue recognition is a fraud risk factor. Estimates, provisions, estimate provisions are fraud risk factor by default. This is given in ISA 240, right? So ISA 240 is telling us there are certain fraud risk factor which are potentially important for the auditor, like revenue recognition, like weak internal controls, and like estimates and provision. These are by default the fraud risk factor. Management past history of bad practices. I hope that's simple enough. And management lacks financial skills. So if the management lacks financial skills, this increases the chances of material misstatement. This increases the chances of material misstatements in the financial statements. Material misstatements in financial statements. Again, this is not a classroom. This is just a webinar just to refresh you, and you find the right track from the article published and from my YouTube video, right? How clear you are with this list? Because again, you need to find everything within the limitation of the webinar. Is everyone becoming clear of the revision in ISA 315? I even guided you about this on my day one, recommended you to watch my YouTube video on this and the article reading. In light of that, I've just given you a list of the revised ISA 315. What are the properties which makes a risk at the upper spectrum? Will you remember the properties which makes the risk at the upper spectrum? Right? Will you remember the properties which makes a risk significant? So anything complex in a case study, anything subjective in a case study, anything uncertain in the case study, anything changed from the last year, anything of a management bias, anything where you have a fraud risk factor, will that define the significant risk in the exam paper? So if the examiner says evaluate the significant risk, will you focus on complex things from the case study? Will you look at subjective things in the case study? Will you look at the uncertain things in the case study? Will you look at the changes from the last year? Right. Upper spectrum means the risk which are at the high levels. Upper spectrum means at the high levels, right? So which are the higher inherent risk? Upper spectrum means higher inherent risk, right? Significant inherent risk. I hope you're clear with that, Asha. Right? Okay. Now tell me, if the examiner asks you in the exam paper, for example, examiner asks you required, evaluate the significant risk of material misstatement in the December 21 exams. Evaluate the significant risk of material misstatement. Examiner used the word significant risk of material misstatement. Will you immediately recall the day 2 of the webinar to success? Will you recall significant can be by complexity, significant can be by subjectivity, significant can be by the change, significant can be because of uncertainty, significant can be because of a management bias, significant can be because of the fraud risk factor, and the list goes on. So will you remember this? Significant risk of material misstatement, right? So this is the terminology. This is the change. This is the ISA 315 revised, right? So be prepared for December 21 exams. Significant risk. How would you think about it? So when you read a case, look at this tip. Look at the tutor tip here. Tutor tip. Now be very watchful of this tutor tip here, right? I'm trying to write it in a different color. The tutor tip. When reading the case, try to pick up situations, try to pick up situations from the case where the properties of a significant risk are present, And I hope you all remember the properties, right? Where the properties of a significant risk are present. Any one of the property, right? Any one of the properties of a significant risk are present as discussed above. So if you identify a risk which has a property which is given in the ISA 315, which makes it a significant risk, you will be rewarded. So will you all remember the properties? Will you all keep the properties in mind when you're reading a case study, picking up the situations which are complex, uncertain, subjective, and the list goes on, right? Clear? So when reading the case, try to pick up the situations from the case where the properties of a significant risk are present and write them in your answer on priority basis. Write them in your answer on a priority basis. So if you write them on the priority basis, you are a good student. Evaluate the significant risk. That is the literal meaning of the word prioritize the risk. So significant risk, prioritize the significant risk. So if you want to prioritize the significant risk, then try to search for risk where the properties of a significant risk are present. You can write them in any order. So you go top down, right? When you're reading the case, you read the case top down, right? You read the case top down. So wherever you find a property of a significant risk, wherever you find a property of a significant risk, annotate it so that you write this as annotate it so that you write this later in your answer. Is that clear? Please read the tutor tip and tell me, are you all clear? Yes, the recordings are available, right? Don't be worried about it. Just read the tip and tell me, are you all clear? So is it good enough for all of you? Are you getting the right track from yesterday when we just generally discussed this and today when we are specifically discussing it? How clear you are when you joined the webinar shortly a couple of minutes ago and now? Are you all very clear on this? Is that difficult? Annotate means to highlight, right? In a computer-based exam, right? Annotate means you underline something, because in the computer-based exam, the only way to annotate is highlight. Good, very good. Okay, move next. So you all know what is a ROM, inherent risk, and the changes in the inherent risk as per ISA 315, the significant risk, the upper spectrum of inherent risk, control risk. I hope I don't need to explain. Yes, Kedrick, they can be written in any order. They can be written in any order. So far, they are all significant risk. You can write them in any order, right? But they should have the properties of a significant risk. Clear? Okay, do you all know control risk? I'm not spelling out control risk. You know the deficiencies in the internal control, the weak internal controls, right? So generally, when you have a weak internal control in the exam paper, you pick it up as a control risk, right? So weak internal controls in the case study, you pick it up as a control risk. Yes, the indicator should be present, right? For you to pick up risk as a significant risk, OA. So you need to pick up the risk from the case study, which has the indicators present, right? So I just be doing an exercise on that. Clear? So that is the ROM. You have to be very watchful of ROM in exam paper, right? So if the examiner tells you evaluate a significant ROM, please be prepared for it. And definitely the examiner will ask that in the December 21 exams, because that has started from the September 21 exams. Okay, let's move back to my presentation. Okay. Please understand the limitation of the webinar. This is not a classroom, but I'm trying to give you the best of the solutions here. Now, when you look at a ROM, you should be good on ROM, and then you can watch my previous webinars, right, for everything. When you look at a risk of material misstatement as a definition quickly, the risk of material misstatement, the term misstatement is defined in the ISA 450, sorry. ISA 450 defines misstatement, which is important to understand the right concept of a misstatement in exam paper. The difference between the amount, classification, presentation, or a disclosure of a reported financial statement item, something reported in the financial statement, and the amount, classification, presentation, or disclosure that is required by the applicable financial reporting standard. So what is a misstatement? A misstatement is a difference between something reported in the financial statement and between something required. Who reports things in the financial statement? Who reports things in the financial statement? The management, right? And is there a risk associated with management reporting things in the financial statement? Is there a risk of window dressing associated? Is there an inherent risk associated with management reporting something in the financial statement? So when you're reading a case and the management is reporting something in the case, will you be watchful? If management is reporting something in the case study, will you be concerned about it? Will you be skeptical about it? And what is required? Required by what? Required by the accounting standards, required by the IFRS. So the difference, what is the management doing and what is required? The difference is a misstatement. For example, management has not given a disclosure of a related party transaction reported. So management has not given a disclosure of a related party transaction, right? What is required? The management should give a disclosure of a related party transaction. So what is the difference? What is the difference? The difference is no disclosure. So no disclosure becomes a misstatement. So in the exam, you should know your accounting standards very well. And that is what I was making you realize yesterday on my day one, that your accounting standards have to be very, very strong. Just let me put something down over here very quickly for you. Misstatement is the difference between, because this is important for you to write a good answer. A misstatement is a difference between something, number one, reported in the financial statement by the management and something required by the relevant financial reporting standards. You try to understand this quickly because this is crucial, right? So something reported by the management, and normally management has a biasness, management has the risk of window dressing, management do something wrong mostly. So you have to be very skeptical in the exam paper about that, and something required. So if anyone understands this term reported and required, you are capable of finding a misstatement in the exam paper. Required in the financial, reported in the financial statement by the management. Will this be given in the case study? Will this be given in the case? Definitely. What management has reported, will the examiner tell you about that? Definitely, because the case study is going on the management, right? The case study is going on the management and you are the auditor. So will be given in the case study what is reported. Required, you need to judge. You need to judge as a student and pick up the misstatement. Pick up the misstatement. Pick up the misstatement. For example, the case tells you no disclosure made of a related party transaction. So case is telling you management has not given any disclosure of a related party transaction. So that is reported, right? That is reported. So the case tells you no disclosure of a related party transaction has been made by management. Now, what you need to think about as a student, you need to recall your knowledge. You need to recall your knowledge of IAS 24 and mention that this standard requires a disclosure. This standard requires a disclosure. So if no disclosure is given, the financial statements are materially misstated. The financial statements are materially misstated. So As a student, you should be very strong on required. Now tell me, should you be very strong on your SBR knowledge? Because if you're strong on your SBR knowledge, you can pick up the difference. If you're weak on your SBR knowledge, you cannot pick the difference between something reported and required. Now, if the disclosure has not been given and you have the SBR knowledge, you will say the disclosure is required. Now, because the disclosure is required and the management has not made it, is it resulting in a misstatement? Is it resulting in a misstatement? Look at the last line. Is it resulting in a misstatement? Yes, because you found the difference. Now tell me, any student who is strong in SBR, can you find the difference in the exam paper? And if you find the difference, have you found the misstatement? So difference is the misstatement. Difference is the misstatement. I hope you now realize the importance of accounting standards. You now realize how important accounting standards are for you to pick up a misstatement in the exam paper. Is everyone clear between reported and required? Please inform me that quickly. And has this exercise helped you, reported and required? Because that's a misstatement, right? Okay, move next. Now, resources from where you can revise the accounting standards. I even mentioned them yesterday that there are a couple of resources from where you can revise these standards. You can look at these, you can revise the standards from the examiner answers. I did recommend that on day one. I'm not going back to it. I did recommend that in the BPP book and the Kaplan book, there is a chapter, the last chapter on the financial standard revision. So you can follow the BPP and Kaplan book, or you can at least read the accounting issue article part 3, where I did discuss yesterday that IAS 36 and IAS 38 has been covered by the examiner. So 2 IAS has been covered by the examiner in the exam technique article part 3. And I think I even recommended you a YouTube channel, CPD box, yesterday. So a couple of sources from where you can revise your accounting standards, so you are good on finding the difference between something reported and something required. I hope you're all clear on this, right? Okay, now moving on. Risk of material misstatement, a step-by-step approach. This is very important. Now, when you're writing an answer for a risk of material misstatement, and you know most of the risk of material misstatements are around accounting treatments, how would you formulate your answer? Now, you need to agree with me that when you are picking a risk of material misstatement, most of the material misstatements are around the accounting treatments. Agree, disagree? Some of the material misstatements can be like no internal audit department. Do you need to quote an accounting standards? No internal audit department? No. No internal audit department. Now that is a material misstatement without a accounting treatment. So sometime you are writing a material misstatement which does not have a need of an accounting standard. But most of the time, when you're writing a misstatement, you need to have the accounting knowledge, because most of the misstatements are linked with accounting standards, right? Now, examiner tells you in the article, exam technique article part 2, which you have to read on your own after the webinar ends. This is the 4-step process examiner wants you to follow. Number 1, examiner tells you when you're writing a material misstatement in the exam, comment on the materiality, number 1. And then examiner tells you, for the students who are who are not clever, comment on the materiality, but look at the golden words of the examiner, where possible. You cannot comment on the materiality in every situation. You cannot comment on the materiality forcefully. So many students forcefully comment on the materiality when it's not possible. So comment on the materiality where possible. Is everyone clear with this term, where possible? Are you all clear with where possible? So comment on the materiality, because you are writing an answer risk of material misstatement. Because it's a material misstatement, so you have to comment on it. 1 mark per materiality. So when you comment on the materiality, how many marks will you get? How many marks will you get for a materiality? 1 mark. To a maximum of 3 marks. So how many maximum marks can you get on materiality? 3. Even if you comment on 5 materialities, you comment on 6 materialities, how many marks will you get? 3. Will you get 6 marks for 6 comments? No. So if a student comments on 6 materialities, will he get 6 marks? No, he will still get 3. So in an exam, you should comment on materiality irrespective of the marks, because commenting on the materiality is a good skill of a manager. So comment on the materiality is not wasting your time in exam paper. It's just like one sentence. So just like one sentence, comment on the materiality. But how many marks will you get on comment on materiality? Maximum 3. Even if you comment on 4, 5, 6, 7, you're still getting 3 marks. But try to comment on every possible area where materiality is possible. Don't look at the 3 marks, because there might be a situation that some of your answers are wrong, some of your answers are right. So it's better that you go down commenting on many. But maximum marks you will be getting is 3, not more than that. Concisely, yes, it has changed to 3 now, right? From the March, June 21 exams, it has now changed to 3 maximum marks, not 4. Sheriff. Concisely comment on the accounting treatment. Examiner is saying, then you comment on the accounting treatment. Then you tell what is the right accounting treatment, that a disclosure is required by IAS 24. Comment on the accounting treatment. Look at this word, concisely. Students overlook this word. Concisely comment on the accounting treatment. No credit for mentioning the name or reference number of the accounting standard. This is written in the Examiner article, part 3, accounting techniques, part 3 article. Examiner has written that. No number for name and reference. You see the examiner answer given, and you say, oh, examiner has written in the answer the name and the title of the IAS. I should be writing it. No, examiner is saying you should not write it. You should not be writing it. Right? So are you naming the IAS? Are you giving the title of the IAS? No. Are you getting any marks for it? No. Don't look at the examiner answers. But concisely comment on the accounting treatment. How many marks you have for an accounting treatment to comment on? Every comment on an accounting treatment is worth 1 mark. For 1 mark, how much you can write? To me, I think 1 mark, the maximum you can write on 1 mark is 3 to 4 sentences. Maximum 3 to 4 sentences. Related party transaction, related party disclosure not given. If I need to write an accounting treatment for a related party transaction, I think that's just 1 line. I should write related party disclosure should be given. That is it. Just 1 line. I cannot drag it. So concisely write the accounting treatment, 1 mark. Because most of the material misstatement relates with accounting treatments. Then next, comment on the risk. What is the risk? You are attempting a question on a risk of material misstatement and the student don't comment on the risk. Interesting. I think the most heavyweight answer is the accounting treatment. I hope you agree with me. I've seen so many students mock assignments. The most heavyweight part in your ROM answer is accounting treatment. Risk. And the student ignore risk. I just give you some examples. Don't be worried about it, Saqib. Risk. What is the risk? There can be a risk of wrong recognition. There can be a risk of wrong valuation. There can be a risk of no disclosure. There can be a risk of wrong classification. There can be so many types of risk in an accounting standard, right? There can be so many types of risk. And if there is a risk, then what is the impact of the risk? What is the impact of the risk on the financial statement? Understatement, overstatement. 4 things. Come back to the Word file before we quickly look at the December 18 past paper in the session today. Look at the Word file. Now focus. No Q&As for the next 5 minutes, right? Focus on it. A step-by-step approach to writing a good ROM answer. Can everyone see this on your screen? The Word file, please tell me. The first step is comment on the materiality. where possible, and 1 mark per comment to a max of 3 marks. Next, concisely comment on the accounting treatment. No marks are available for the name and number of the IAS or the IFRS. Then comment on the risk and then comment on the impact. Now let's take an exercise quickly. Let's do a quick exercise. Okay, I'm giving you 3 situations, and I just want your quick answers to these 3 situations, right? So we can wrap things up and proceed towards the exam paper, which is crucial. If we fail to complete something of the agenda today, we'll take that agenda to the day 3 tomorrow. So don't be worried about it. I should not rush. We should go at a good pace. If something is incomplete today, I'll take it to the day 3 tomorrow. And that's how we will keep changing the agendas, right? So if, for example, I miss out business risk today, so I'll do business risk tomorrow, and then I'll go to the another agenda. So don't be worried about it, right? But let's first properly complete ROM. Exercise. Look at this. Comment on the materiality, right? The first thing. Okay, let's go about it. There is no internal audit function in the company. This is the first situation. The second situation is share-based payment expense is not recorded. 2. The third situation is a government grant of $2 million was received during the year. The grant is to be utilized over the next 5 years, and so on and so forth. The total assets of the company is $15 million, and the profit before tax of the company is $10 million. Full stop. Okay, let's see who is a clever student. Look at the 4 steps above. How many steps can I apply to the situation number 1? There is no internal audit function in the company. How many steps can I apply to this? Can I apply the first step? No materialities, right? Can I comment on the accounting treatment? No. Can I just comment on the risk and impact? Yes. So I think I can only apply the step 3 and 4. I'll just guide you. Okay, tell me about the second situation, share-based payment expense not recorded. How many steps can I apply? Can I find the materiality? Is any number given over there? Do I know the value of share-based payment expense? No, I don't know the value. So which step can I apply here? I can apply the step 2, 3, and 4. Okay. 2, 3, and 4. I have to write the accounting treatment of IFRS 2, right? That a share-based payment expense should be recorded, right? I have to write that accounting treatment. Okay. Next, third, government grant. How many steps can I apply to the government grant? All 4, right? Because there is a value. I can apply the step 1, 2, 3, 4. See this? Now tell me, are you clear with the 4-step model? Comment on the materiality where possible. So where was the comment on materiality possible? Only in the point number 3. So just let me give this numbers, right? Would be more easier for you. Comment on the materiality was only possible in the situation C. Concisely comment on the accounting treatment. Where was that possible? Accounting treatment was only possible in the situation B and C. Risk in all situations. And impact. Now let's go quickly. ABC, right? What is the risk in A? Let's do the answer plan quickly. So you're very clear with it. Answer. Okay, let's first find the answer for A quickly in the bullet forms. I'm writing just in the bullet form, right? No need to focus on material by nature, right? There are few things which are material by nature, like a related party transaction. Otherwise than that, you have to judge the quantitative materiality, Hamza, in the exam paper, right? So wherever like a share-based payment expense, you cannot judge it on the basis of qualitative, right? Share-based payment expense has to be recognized on quantitative basis. Okay, look at A. No internal audit function. What's the risk? The risk is that there will be a weak monitoring. There will be a weak monitoring. There will be a weak monitoring or no monitoring of the internal controls. There will be no monitoring or weak monitoring of internal control. That is the risk, which will lead to material misstatements in the financial statements. Thus, financial statements will be materially misstated or could be materially misstated. Can I find the under and overstatements with no internal audit department? Can I find what is understated and what is overstated? No, I just need to be blunt here. So what is the risk? Look at my line of risk. The risk, and then look at my line of impact. Just let me color them, right? Let's put the risk in green, and let's put the impact in blue. So risk is the green, and the impact is the blue. Look at this. Is everyone clear with A? Look at the B. Risk and impact, right? I'm not doing anything else, right? I'm just focusing on risk and impact. In the second situation, share-based payment expense is not recorded. What is the risk? No expense recognized. So no expense recognized. So lack of recognition, right? No recognition. So do you believe no recognition is the risk? No recognition is the risk, right? No recognition is the risk. Full stop. Thus, if expense are understated and profit is overstated. We are not sure if it is a cash settled share-based payment plan or an equity settled share-based payment plan. If it is a cash settled, then the liability is understated. If it is an equity settled, then equity is understated, right? I hope you're clear on that. So I'm just focusing on thus expense are understated and profit is overstated. But in the exam, you have to judge, is it an equity settled? Sadia, this is not a complete answer I'm giving you, right? I'm just doing an exercise to pick up what is the risk and an impact, right? Right? So don't judge this is an answer. This is just an exercise, right? So no expense recognized. When I write the answer, I'll tell you how to write the answer. No expense recognized is the risk, and thus expense is understated and overstated. That is the impact. So are you getting clear between risk and impact? Okay, next, third situation, C, grant of $2 million. So what's the risk in the grant? Because that is not given with clarity. Is the examiner telling us what the government has done, what the company has done with the government grant? But normally, what is the journal risk in grant? The grant could be recognized as income immediately. So is there a risk that the management recognize the $2 million immediately as an income rather than recognizing it as a deferred income, right? Grant could be recognized. I'm not commenting on materialities and accounting treatment, everyone. I'm just trying to make a correction of risk and impact. So please be sure of that. You need to comment on materiality where possible. You need to comment on accounting treatment where possible. I'm just focusing on a correction for risk and impact in my exercise. Grant could be recognized as income immediately because you're not sure what the company is doing for $2 million. Is the situation number 3 telling us what has management done? A lot of time in the exam paper, the management stance is silent. Look at the C situation. Is the management stands silent, everyone? What is the management doing with $2 million? Do we know about it? No. So should we be skeptical? Should we be skeptical that whatever management do is always wrong? So thinking skeptically, I wrote grant could be recognized as income immediately rather than recognized as deferred income. So is there a risk of wrong recognition? Recognized as income rather than being recognized as a deferred income? Is that the risk? So the risk relates with recognition. So recognition becomes your risk. Recognition becomes your risk. Full stop. Thus, income could be overstated. Income could be overstated. Full stop. So this becomes your impact, and deferred income could be understated. Is that clear to all of you how we picked up the greens and blues? So do you find a clarity on what is a risk and what is an impact? So you have to segregate that in exam paper. So many times when I check the mock exams and the assignments of the student, I don't find a segregation between a risk and an impact. So you write the risk before and you write the impact after. So the risk can be recognition, the risk can be classification, the risk can be presentation, the risk can be a disclosure. There can be so many risks when it comes to the management. Right? Is everyone clear on the 4-step model? So impact is either the under or overstatement, or impact is either the financial statements are materially misstated, right? So how many types of impacts are there? Either it's the understatement or the overstatement, or it's the financial statements could be materially misstated. So when you can pick up the unders and overstatement, be very particular about it. But when you cannot pick the under and overstatements, then what you write in the exam paper, financial statements could be materially misstated. So in the situation number 1, there is no internal audit function. I wrote financial statements could be materially misstated. But in the situation number 2, because we were talking about an expense, so I was very particular that expense could be understated. In the situation number 3, we were talking about a grant. So I was very particular that the income could be overstated. So when you can pick up the unders and overstatements, be very particular about it. No, in a question on risk, you cannot write the impact on the audit opinion, whoever is asking that illogical question. So are you clear with the step-by-step approach? I hope you continue with this, right? Just moving back to my presentation now. So this is a 4-step model which you have to become used to. When I do the drill on the December 18 paper, I'll assure. Comment on the materiality to a maximum of 3 marks. Concisely comment on the treatment with 1 mark. Comment on the risk and comment on the impact, right? That's how you go down with it. So the maximum marks you can fetch from 1 risk is 3. Maximum marks you can fetch from 1 risk is 3. That is 1 for materiality, 1 for treatment, 0.5 for risk, and 0.5 for impact. But try to understand, back again, marking schemes are important. If you get this situation in exam paper, there is no internal audit function. When there is no accounting treatment, there is no materialities. So this situation in the exam is worth 2 marks, right? When there is an accounting treatment given, but there is no materiality, then again, this situation is worth 2 marks in exam paper. So the low side of the risk is 2. But when you can calculate the materiality and everything is possible, then the maximum worth is 3 marks. So minimum side of a risk is 2. The maximum side of a risk is 3. When you can get 3 marks? When you can apply the 4 steps. See, when you can apply the 4 steps, you will get 3 marks. But when you apply less than 4 steps, you get 2. When you apply less than 4 steps, you get 2. Is that clear to all of you? So there are only 2 marking schemes, 3 and 2, 3 and 2. Is that clear? The marking schemes, everyone? Okay, let's put the simplistic marking scheme, which at least makes things better for all of you. Because I've been guiding on marking schemes in all my webinars, but just want to assure that you get things clear with this webinar as well. Okay, when you apply all the 4 steps, the maximum marks per risk is 3. When you apply less than 4 steps, whether it's 3, whether it's 2, the max marks is 2 per risk. Is there a 1 mark risk? No. Is there a 1.5 mark risk? No. There are only 3 mark risk and 2 mark risk. Is that clear to all of you? So is everyone clear with a marking scheme? When you apply 4, you get 3. When you apply less than 4, you get 2. Is that simplistic? No complexities in this marking scheme, right? Okay, good enough. Move back. And let's wrap up this topic, risk of material misstatement. That's the maximum we can discuss in this session, right? Business risk next. Are you all prepared for business risk? Before we take on an exam paper. Okay, now be very clear that in the session so far, we have covered some examples and situations of ROM. I hope you are all very clear within the first 1 hour of this webinar. When we started this webinar today, 1 hour ago, we started with ROM. We started focusing on the upper spectrum of inherent risk, the significant risk, and then we went down with some examples, and then we found what is a misstatement. Then I gave you some examples of the 4-step model, which you have to use in writing a good answer. And then I give you some exercise on that 4-step model and the marking scheme, right? Now, if you get results in a dashboard form, I will just be doing a drill on that when I start the past paper. How you prioritize the risk, I've already given you an example on that, that any risk in the exam paper, which has a factor, which makes it a significant risk, you can write it in any order. I think I was very clear on that, right? So when you're prioritizing the risk, you in the exam paper, you have some challenges. In that challenges, any risk which has the property of a significant risk, you can write it in any order, right? So should we move now to the business risk understanding? Should not take much time. Business risk is more easier to understand than ROM because there's no complexity in the business risk. Okay, let's start with the new exercise, business risk. I hope this knowledge has given you something on ROM. We'll do the same knowledge on business risk now. Okay, just let's take a quick refresher of like 20 minutes on business risk. Then I'll give you a break, and right after the break, we'll start the past paper. Okay, let's see what you need to understand about business risk. You need to watch my previous webinars on business risk. I've already recommended you the webinars to watch at the start of the webinar today. Which webinars to watch? Please do so. Understanding the business risk. Now listen to me carefully before I give you a quick summary. Should not take more than 25 minutes, and we'll wrap up the understanding on business risk. Pretty simple. A business risk is a risk resulting from significant conditions, events, circumstances, actions of the management, because sometimes the management takes the wrong actions of the management, or inactions. Or sometimes the management don't take an action which causes a risk. So sometimes the management action is wrong, or sometimes the management takes an action which itself is wrong. So action or inaction that could adversely affect the objectives of the entity. And you know the objective of the entity is multiple. In the exam paper, a situation like an event, like a circumstance, like an action, like an inaction, something happening in the case study which you believe have an adverse impact on the business objective will be treated as a business risk. In the business risk, we are not concerned about accounting treatments. In the business risk, we're not concerned about the understatements and the overstatements because that's the mindset of an audit risk. That's the mindset of a ROM. In a business risk, we're trying to pick up a situation from the exam which can adversely impact on the objectives of the business, full stop. That's number one. I'll give you an example. Number two, for the purpose of exam, these risks can usually be thought in terms of conditions that may prevent a business from meeting its objective. Anything which prevent a business from meeting its objectives and might include risk to achieving future profits or cash flows or business survival. So business risk is not just impacting your present business. Business risk can even impact your future business. So in the exam, when you're picking up a business risk, the business risk could be in present today, and the business risk can be something affecting your business future. You're all familiar with SWOT analysis. Do you not? Do you all know about SWOT analysis? In a SWOT analysis, you have a weakness, which is present weakness. And in a SWOT analysis, you have a threat. Threat is future, right? Threat is future. Weakness is today. Threats are future. So when you look at a risk, so risk can be a weakness, risk can be a threat in a SWOT model. So risk can be in present today, 2021, risk can be in future, 2023. So any situation which impacts the business objective today, or any situation which impacts the business objective in future, will be considered as a business risk. Is everyone clear about that? This is a simplified explanation, but will help you describe the implication of most risk in the exam paper. Most of the time, the business risk in the exam paper are around profits, cash flows, survivals. Most of the time, this is examiner wordings, right? This is not my wording. Examiner says most of the time, the risk you get in the exam paper is around survival, is around cash flows, is around profits. These are the three critical areas where objectives are hurt in exam. So what are we getting from this discussion? Number one, in the exam paper, a business risk is any situation in the case study, like an event or a circumstance, or like an event, like a circumstance, or management action, which you think is wrong, management action, or management inaction. In the exam paper, management is not taking an action when they should have taken it. Any situation in the exam paper, like an event described by the examiner, a circumstance described by the examiner, or a management action described, or a management inaction described, any situation in the case study which adversely impact the business objectives is a business risk. Business risk could be in present or in future. Try to understand. One is weakness, weaknesses versus threat. I hope you are very clear with the SWOT model. Weaknesses versus threat. Weaknesses are today, threats are future. So threats are future, weaknesses are today. So if you know the difference, you are capable of doing it. Business risk could be in present or future in exam. Lastly, business objectives. What are business objectives which could be adversely affected? Business objectives includes profitability, market share, reputation, liquidity, survival, going concern, stakeholder satisfaction. That is also a business objective. You want to satisfy your stakeholders, as am I trying to satisfy all of you today. So business objectives. There can be so many business objectives which, if adversely impacted, it is a business risk. So in an exam, there might be a situation which adversely impact any of the following objectives. Any of the following objectives. The more common one in exam, reputation is very common, liquidity is very common, survival is very common, profitability is very common. These are very common ones in exam paper, the one I just bold. Is everyone clear with this analysis so far? Are you all sound on this analysis? So it could be anything in the exam which adversely affects the business objectives. Be sound, what is the business objective? Examiner is saying most of the time it's profit, most of the time it's cash flows, and most of the time it's survival. So there could be anything. There could be operational problems, there could be financial problems, there could be compliance problems. So examples in the past papers includes financial problems facing the business, like liquidity, legal problems facing the business resulting in bad reputation, legal problems, operational problems like relying on one supplier. Example, shortage of a raw material. Shortage of a raw material is an operational problem. Reliance on one supplier. Reliance on one supplier. Legal problems. Ongoing legal cases. Ongoing legal case. Case filed by an ex-employee. These are all causing the reputational damage to the business, right? Financial problems, liquidity issues, low cash balance, high gearing. These are all business risks, right? Negative cash flows, very good. Negative cash flows, good, etc. These are common phenomena, right? Financial problems coming to the case studies, legal problems coming to the case study, operational problems coming to the case study. I hope you're coming clear with what is a business risk. Are there any, is there any relevance of an accounting treatments in business risk? No. Are you thinking about understatements and overstatements in business risk? No. Are you thinking about materialities in business risk? No. What are don'ts of a business risk? What are don'ts of a business risk? What are don'ts of a business risk? Number one. Sorry, just 1 minute. What are don'ts of the business risk? No accounting treatments. No accounting treatments is involved in business risk. No materiality is involved in business risk, because that's a phenomena which relates with audit risk and ROM. No materiality is involved. No under or overstatement, or no under or overstatement is involved in the business risk. Right. No need of a significant business risk, right? Even if the examiner uses a terminology significant business risk, then you just need to pick up the one which are more important in the case study in the top order, right? So a significant business risk has nothing to do with the upper spectrum or something like that. The significant business risk can be a terminology where you just need to pick up the risks which are inside the case study, not taking hypothetical assumptions. I'll just clear that once I do the December 18 paper, Abyss. No accounting treatments, no materialities, no under and overstatements involved, right? These are the don'ts of a business risk. What you should do in a business risk. Simply pick up a situation from case resulting in a business risk. Justify why justify the impact of the situation, on business objectives, and you score 2 marks. Objectives to score 2 marks. 2 marks per business risk, right? Simply pick up a situation from the case where you believe is a business risk, justify the impact of that situation on the business objectives to score 2 marks. So it's about a situation and the impact of the situation. That's so simple with business risk. And examiner is so happy with students' answer on business risk. Examiner is very happy. And that's the reason business risk comes very less time in the past paper. The potential of this for December is high. Yes, I will be drafting answer. Don't be worried about it, because that's my last agenda for the day, is to draft an answer for you. But is everyone clear so far, so forth? Yes, there is no spectrum involvement in business risk, Sadia. I've not used that word spectrum in business risk. That was just with ROM and audit risk, right? There could be prioritization of business risk. There could be significant business risk, not by spectrum, but there could be significant business risk. Suppose one business risk is hitting the profitability, Sadia, and one business risk is hitting survival, which is important, which is significant. The one hitting survival or the one hitting profitability? Definitely survival. So in that way, can you do the significant business risk in exam, that some of the objectives are more important? One business risk is hitting the stakeholder satisfaction, but one business risk is hitting the profitability. Which is more important for a listed company? Profitability or a stakeholder satisfaction? If you have to bargain among the two, definitely profitability for a listed company, right? So that way you can do it, right? If the examiner says significant business risk, so at least you can bargain on the significant in like a journal manner. Is everyone clear with business risk? Is that sound for all of you? Yes, you should. Definitely the word significant will come in December exams, right? Because that's now a phenomena. And I will be doing a drill on the dashboards today as well. Don't be worried about it. Stakeholder satisfaction can later link to profitability, Raza. But if I was just giving you a layman example, that if you need to bargain between a profitability and a stakeholder satisfaction, which one will you bargain as a more important one? So to me, it's a profitability, because we are all commercial mindset, business. Okay, moving on, business risk, last of the things. Just look at this quickly. In journal, you are looking for a risk in the information that the examiner has presented to you within the scenario to find a business risk. At this level, you will not be credited for defining a business risk, nor will you receive any marks for describing what a client should do to mitigate the risk. So there is no marks for mitigation. There is no marks for defining. Examiner criticized students that they do write the risk mitigation. Examiner is asking you evaluate a risk, not the mitigation. In the AAA paper, we never write mitigation of any risk, whether it is audit, ROM, or business. We never define a risk. So please refrain from defining or writing mitigations. I've seen mock exams where students do write mitigations, which is wrong. Last, as such, you need to consider how to frame the information which is provided as a business risk. As a journal rule, marks for business risk will be awarded like following. For identifying a business risk, you get half a mark, which is very good. At least you can take it. For briefly explained business risk, you get 1 mark. And for a full marks will only be awarded where there is a well-explained business risk, and that is 2. So if you just identify a risk, half a mark. If you just briefly explain it, 1 mark. But if you fully explain it, 2 marks. So what are we aiming at? Are we aiming at half? Are we aiming at 1? Are we aiming at 2? Definitely, we are all aiming at 2. So when we will get 2 marks? When we fully define a business risk. And I will tell you how to define a business risk fully. Don't be worried about it. Marks will not be awarded for risk which are purely speculative. That means which are not even given in the case study. Speculative risk means not in the case study. Hypothetical. A lot of time, the students ignore the case study and they try to find out risk from out of the case study. No, speculative. You have to find the risk within the case study to pass. Never write speculative audit risk. Never write speculative ROM. Never write speculative business risk. You will not get anything for it. I hope you're getting clarity on this, everyone. And the last thing is the marking schemes. I've already given you marking schemes, right? But once I do the December 18 paper, I will be clarifying the marking schemes more, but I've already given you the marking scheme for a ROM, 3 marks and 2 marks. And I've already given you a marking scheme for a business risk, which is 2 marks. But if there is any correction needed, I'll do that once I do the drill of the December 18 paper. Is that clear to all of you? So how has been the session today so far, so forth? Because we are moving towards the last leg of the session. Half the session gone, half the session remains. Has it given you some concept building around the topic within the constraint of the webinar, within the constraint that this is a free resource, within the constraint that this is within the limitation of 3 hours? I hope you got some clarifications on this area. Thank you so much for that. Okay, now just moving to last thing before I give you a break. I just want to set something before I give you a break, right? Now, just need to do that. Okay, can you all see the practice platform in front of your screen? I hope you're familiar with the screen of the practice platform at least. Are you all familiar with the screen of practice platform? How many of you have seen the screen? Tell me. Have you seen it? Right, seen, not seen? I hope there is no student who says not seen, because this is something you must have seen by now, right? Thank you. I hope it's so soothing not to see a comment not seen yet so far. Thank you. Okay, now you're all familiar with the screen, right? Very good. Okay, now you go to the audit and assurance, click on it. You get a blank workspace. I'll be guiding you about the blank workspace over the next 3 days. You have the international, because we are studying the international paper. You click on international, you come to ACC official resources. You have a past exam library, you have the practice exams, and you have the specimen exam. The past exam library consists of the 2 recent papers, the June 21 and December 20. We are not doing it currently. You go to the practice exam, and in the practice exam, the first practice exam on your screen is September 18. The second practice exam is December 18. The third practice exam is the June 19. So which practice exam are we doing today? What is the agenda for today? December 18. So which practice exam? 2. So I'll click on this assign practice exam 2, and the practice exam assigned will come on the left hand side under the assigned material. See this, AAA, past and practice exams. I click on it and I find my practice exam 2. So this is my practice exam 2 and I start it. Right now, right on your screen, you can see the practice exam 2. I just click next, next, next. These are all the instruction screens, which I just need to skip out. You have 10 minutes in the exam to read these instructions, and you should be familiar with these instructions while you are practicing at home. I'm just going over these instructions, not wasting time on them. This is your responsibility to read all the instructions carefully. You come to the summary, section A, section B, and then you click next, and it says, if you are ready to begin your exam, click yes, yes. And you come to the section A, which is the question number 1. You click next, and you come to the main screen. This is the main screen of the question number 1. I hope you can all see this with clarity, the font size and everything. Is the screen coming with clarity in front of you in terms of the font size, and is it visible to all of you? Yes, because I cannot increase the font size. I hope this font size is fitting for everyone, right? Good. Now, right after the break, we'll start looking at this screen. We'll start looking at the December 18 question number 1. I'll just spend 15 to 20 minutes on the platform, guide you some fundamentals of the platform, because every day I have to guide you about the fundamentals of the platform. So we'll move away from the platform 15 to 20 minutes later, and then I'll come back to my Word file and I'll start doing the drill of the December 18 paper, where we will be spending time on identifying the business risk and identifying the ROM. And I'll give you an exercise of a dashboard and prioritizing risk. By 8:30, if you're left with something, don't be worried about it. This webinar is going in continuation. So anything left today will resume back tomorrow on day 3. And I'll resume day 3 with anything left on day 2. Then we'll start with the agenda of the day 3. Is that clear to all of you? But if we wrap up by 8:30, that's good. But if we don't, we'll shift it to the next day. So when you are watching the recordings, so it will go in continuity. Okay, we are now taking a break. It's 7 p.m. Pakistan time. So we'll resume back at 7:15 p.m. Pakistan time, right? So you have a 15 minutes break, technically a 14 minutes break. It's already 7:01 p.m. So please be back to the classroom at 7:15 p.m. Pakistan time. Is that clear to all of you? So I'm muting myself and putting my camera off, and we'll be starting with December 18 question number 1 right after the break. Please drop the feedback about the session today on a scale of 1 to 5, 1 being poor and 5 being excellent. So please rate from 1 to 5 with objectivity, and I'll meet you back at 7:15. Thank you. Yes, welcome back, everyone. We will be starting at 7:15, so don't be worried about it. That is the standard time, but I just came back to the class, so if I can answer some of your questions. Eamon, yes, I have covered that. And at the beginning of my day 2 webinar today, I just guided about it that in my June 21 webinar, when you get the presentation for day 2 on the WhatsApp group, you can just click on the hyperlink mentioned and you will reach the June 21 webinar where I have done a question with analytical procedures on the spreadsheet. So how to use a spreadsheet and how to do the analytical procedures on the spreadsheet. I've already conducted a webinar on that, which was by June 21. So you can watch it. I hope you're clear on that, Eamon. And thank you, Sadia, for reconfirming that it was done in the June 21 webinar. Thank you. I hope you're all preparing well for your December 21 exams coming up, and you're spending good amount of time on a daily basis on your AAA paper. Okay, just a minute away, right from the start of the proceedings, right after the break at 7:15 p.m. Just one more minute, and we'll resume back with the proper proceeding for the day 2. I hope you can all hear me right, and I hope you can see my video and you can see the screen in front of you, which is the practice platform. Okay, thank you so much, Saqib, for confirming that. Bay for confirming that. Effie for confirming that as well. Okay, so it's 7:15 p.m. right after the break. Welcome back, day 2. And we are discussing the business risk and the risk of material misstatement. I am your tutor, Kashif Kamran, and this is the webinar to success. We have completed our discussion on business risk and ROM right before the break. And right after the break now, we're focusing on the practice of the December 18 question number 1 on the platform currently, which is in front of your screen. Every day, I'll be spending time on the platform. I'll be spending 15 minutes today, and I'll be spending same time every day. So we accumulate to like 1 hour on the practice platform. Okay. Now, when you look at the practice platform and you look at the question number 1 on the practice platform, you must all be familiar that this screen in front of you, which is right here, this one, this is known as an intro screen, right? This is intro. And the very first thing you have to do in the exam hall or at the home when you're attempting a question is to read this screen, because this screen will give you an introduction about your audit firm, and this screen will give you an introduction about your client, and this screen will also tell you about the number of exhibits you have to read. So this is known as an intro screen, and this should be your first priority. This is your first priority to read the intro screen. Is that clear to all of you? So the order, this is the order, right? So the very first thing you will do when you enter the platform, read this. Clear? And this will tell you about the audit firm, about the client, about the number of exhibits, right? How much time will that take? Just like 3 minutes maximum, because this is such a short information, right? And it will not be more than this in any exam paper. Just like 3 minutes maximum, and you're done with it. Then once you're done with it, you move on the left side. Can you see the left hand side, a panel which has exhibits, a panel which has requirements, and a panel which has response options? Can you see that on the left hand side of the screen, everyone? Right, okay. Now, once you've done with the intro, you move to the left panel. Now, what exactly you're doing in the left panel first? You need to save your time. You need to save your time, right? So in the left panel, you see an option of requirement. Can you all see this option of requirement here? Just simply cross it. No need to open this. What does this tell you? This tell you there are 46 technical marks and there are 4 marks for professional writing a briefing note. You all know that. If you are all familiar with that, you know that there is a 46 technical marks and there are 4 marks for writing a briefing note. So you just open requirement and you close requirement. You're wasting 1-2 minutes in the exam paper. No need to open it, because when you're practicing at home, you know what is in the requirement. So in the actual exam, you're not opening requirements. Is that clear to all of you? Because I'll show you by opening requirement that there is nothing in the requirement. It's just tell you there are 46 technical marks and 4 professional marks. That is it. And you're all aware of it. Am I right? Are you all aware of this 46 and 4? Right. So no need to open requirements, right? So after the intro, where will you go? You will go directly to the exhibits and you will read the first exhibit, which is the partner email. This should be your second. This should be your second. So is everyone following the order? Is everyone following the order, first and second? So first is the intro. Second is the exhibit. Which exhibit? The first one, partner email. Because the partner email contains the requirements. You exactly know what you have to do in A, B, C, D. So the requirements are contained in the partner email. But when you look at this requirement for 50 marks, this is just telling you 46 technical marks and 4 professional marks. No use. What are the actual requirements of the question? Where are they? Everyone, where are the actual requirements of the question A, B, C, D? In the partner email, in the exhibit number 1, always in the exhibit number 1. So read the exhibit number 1 first. After you read the exhibit number 1 and you know exactly what you have to do, don't open the other exhibits. After you read the exhibit 1, the partner email, then come here. Then come here. Open this briefing note. This should be third. This should be third in order. Open the response option, right? Briefing note is the word processor. Briefing note is a word processor. Open the response option, briefing note. Now, when you open the briefing note, I'll just show you that. So a briefing note will open in front of you and you need to write an answer in the briefing note. So you open the word processor, which is the briefing note currently, and you start to write the structure of the briefing note even before you start reading the other exhibit. So after you read the exhibit 1, and you know what to do, you structure your briefing note in 5 minutes. You make your briefing note ready in 5 minutes. And then you go back and you start reading the exhibit number 2, 3, and 4 so that you can fill up the briefing note. So third is the briefing note. And what is fourth? The fourth is, let me change the color. The fourth is reading all the exhibits. Reading all the exhibits is the fourth. How many maximum exhibits you can have in the exam paper? 5 maximum. 6. I think 5 is a common number. 5 maximum exhibits. So 1 is the partner email. So after partner email, you can have 3. After partner email, you can have 4. Or after partner email, you can have 5 maximum. So is everyone clear with the order? First, second, third, fourth. What to do? Now I'm putting this on my Word file. Then I'll exactly demonstrate this 1, 2, 3, 4 in like 5 minutes. And then we'll start answering the question December 18, right? So let me just remove everything from here. And let's go back to the Word file. Okay. Can you all see the Word file in front of your screen, everyone? Okay, good. Let's look at the structure of reading the question number 1 on a practice platform. And I hope you found this good enough. Reading question 1 on practice platform. We'll be doing the 2 and 3 as well on the coming days, so don't be worried about it. Currently, we're looking at the question number 1 on the practice platform. Reading question number 1 on the practice platform. What should you do? Number 1. Firstly, read the intro screen on the right in like in like 2 to 3 minutes. This intro tells you about the name of the audit firm, the client, name of the audit firm, and the client. It also tells you a basic information about client and the number of exhibits you have in the case. That is it. Then after you read the intro screen, which I just guided you, which is the number 1 intro screen, firstly, then secondly, you move where? Secondly, read the partner email, which is exhibit 1 always, in the exam paper. The partner email will tell you what you need to do, and also the fact that you need to present the answer in the form of a briefing note, right? So secondly, where will you go? You will secondly go to the partner email, which is the exhibit number 1 always, right? I hope you're clear so far and so forth. Now, once you know the requirements, once you know what you have to do, what you need to do, right? What will you do? You will then thirdly open the briefing note in the response option, in the left panel, and immediately structure your briefing note in 3 to 4 minutes. Immediately structure your briefing note in 3 to 4 minutes before you start to fill it up by reading other exhibits, So immediately structure the briefing notes, and finally read all other exhibits, except for one, because you've already read it, except for one. Finally, read all the other exhibits, find the information to write your answer, full stop. Thirdly, briefing note in the response option, and finally, read all other exhibits. I hope you are clear with the order of going with the question number 1 in the exam paper. Is everyone sound clear with numbers? Is that exactly what I demonstrated in front of you before coming to the Word file? Is that exactly what I demonstrated? Now let's do it. Okay, let's go back to the platform. Can you see the platform again in front of your screen? Everyone, please confirm that. And is it visible? Is the font size good enough for you to read everything out? Okay, good. Now you open the, I'm not reading the intro, right? I'm just saving my time. I'm not reading the intro. You can read the intro yourself, right? Now, after you read the intro, what should you do next? You read intro yourself, right? But after you read the intro, what will you do? You will open the partner email. So you open the partner email. Can you see the partner email in front of your screen now, everyone? Okay, can see the partner email. I'm putting it on the right-hand side, and I am just increasing the size of the window. Can you see the partner email and the window size in front of your screen? I've just enhanced the window size a bit so it gets good on my screen. This is how it is. And immediately with the partner email, I'll open up my briefing note. See, I click on the briefing note and it opens up. And I move my briefing note on the left-hand side of the screen, and I just place it right like this. Now, can you see two windows simultaneously? One, the briefing note on the left, and one, the partner email on the right. So how many windows maximum should I have on my desktop? 2, not more than that. No 3 windows, right? Never. I don't like 3 windows. I just like 2 maximum. And when you are done with one, close it, open the next one. How many windows? 2. Can you see the 2 windows placed in a very good position on your screen currently? All of you? Good. Okay, now listen to me carefully. First, the partner email. Now, when you look at the partner email, it tells you to the manager from Stella Cross, the partner. So partner is writing it to the manager. The subject of this email is audit planning for Redback Sports Company. The date is the 1st of July, and it says hello. And in the hello, the partner says, I have provided you with some information in the form of number of exhibits, which you see will help you planning the audit of the Redback Sports Limited. Using the information provided in the exhibit 2 and 3, I require you to prepare a briefing note for my use in which you. Examiner is saying exhibit 2 and 3. That's critical. So I need to use my highlighter, yellow. Highlight 2, 3. So should I find the answer from exhibit 4? No. Examiner is saying only exhibit 2 and 3. Sometimes the examiner says using the information provided in all exhibits, then you have to use 2, 3, 4. But now the examiner is saying using the exhibit 2 and 3. Should I use 4? No. Should I use the 4th exhibit? No. Examiner is saying only 2 and 3. I require you to prepare a briefing note. Prepare a briefing note. So should I prepare my answer in a briefing note? Highlight. Important. 2 and 3 is important. Briefing note is important. Evaluate the business risk. So should I evaluate the business risk first in the briefing note? Let's give a different color to a briefing to a business risk, green color. How many marks? 8. Technically, how many business risks should I be writing? 4. Then evaluate the risk of material misstatement. Let's give a different color to risk of material misstatement. Let's give pink color to risk of material misstatement. How many marks do I have for risk of material misstatement? 18. Now, some of them will be worth 3 marks. Some of them will be worth 2 marks. So you need to write some for 3, some for 2. So you cannot be sure about the exact number because some will be worth 2, some will be worth 3, but you have to accumulate your marks up to 18. Then in the C part, you need to write the procedures on the grant. So you need to write the procedures on the grant, which we are not covering currently, for 6 marks in the C requirement, right? Then in the next requirement, examiner says in exhibit 4. Now, the answer of the D requirement will come from exhibit 4, right? So for answer A, for answer B, for answer C, which exhibit should I refer to? Only 2 and 3. But for the answer D, should I refer the exhibit 4? So is exhibit 4 specifically for another requirement? Yes. Evaluate the methods in deciding whether to accept the engagement. I hope you know this topic, practice management, right? Evaluate the matters to be considered in accepting an engagement. Practice management, 8 marks. So I need to consider the matters in accepting an engagement from a new client. In the case study, 8 marks. I highlight this and done. 4 requirements, and that says the last requirement. In relation to the suspicion of fraud in the exhibit number 4, discuss something. So there is some suspicion of fraud in the exhibit number 4, and you have to do something for that for 6 marks. So how many requirements are there for exhibit 4? How many requirements are there for exhibit 4? 2, right? And are we referring to exhibit 4 today? No, because we're not focusing on the exhibit 4 because we're focusing on business risk and ROM. Which exhibit should I read for business risk and ROM? 2 and 3, right? Is that clear? So please read the requirements carefully. Sometimes the examiner says using the information provided in all exhibits. Then you have to read all for business risk, all for ROM. But currently the examiner is saying 2 and 3 for this and 4 for this. What I've seen in the past paper as a tutor, always examiner gives you one exhibit for a very specific requirement. It can be exhibit 5 in most cases, and it can be exhibit 4 in some cases. That examiner gives you the last exhibit for a specific requirement. And it has been a very common practice of examiner. If you've done the past paper, you will agree with me that every time the examiner says using the exhibit 5 do this, using the exhibit 4 do this. Normally examiner gives you one exhibit which is for a certain number of marks in the question number 1. I hope you all agree with me if you have seen the past paper. Fazan, I'm just giving you the time allocations, right? Just don't focus on the time allocation. We'll get distracted, right? I'll tell you the time to read and time to write. Just ignore it currently, okay? So is everyone clear? Now see, once I read the requirements, I should jump to my briefing note. Can you all see the briefing note on the left-hand side? So I simply press my bold button here and I'll write the heading. I hope you know how to format the briefing note. I've guided that in so many webinars. You put the heading briefing note to, from, subject, as you got from the email of the partner, to, from, subject. Because the partner email is telling you the date is the 1st of July. So you can write the date, but you cannot put the actual date, but because you got the email on the 1st, right? After you got the email, you will work on it. You might take 2 days, you might take 3 days. So can you know the exact date you are responding back to the partner? No. On the 1st, you got the email. So you might take 3 days, 4 days to answer the email of the partner. And you might respond him on the 4th of July or on the 5th of July. So in the exam, you will keep the date blank. You will not write any date. You will simply say cross, slash, cross, slash, cross, 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 blank. Then after that, you write the introduction of a briefing note. Then you have the requirement A, you have the requirement B, you have the requirement C, you have the requirement D, you have the requirement E, and you finally go down with a conclusion of a briefing note. This is the structure you should make ready in 2 minutes. See how much time I took to make this structure ready. Tell me, are you getting clear with the quick structure? See how much time I took to make this structure ready, everyone. You can increase the font size if you want. There on the left hand side, you can see the headings, heading 1, heading 2, heading 3, heading 4. So if you want to increase the font size, you can increase the font size. I just choose the heading 2 to increase my font size. This is the structure of the briefing note. No, you cannot put the today's date right in exam. Just leave the date blank, right? Just leave the date blank, right? 1 to 2 minutes. So is everyone clear with the format? Now, who is the 2 here? Are we writing this email to the partner now? So to and from will change positions, right? The to and from in the exhibit number 1 will change position. The from will become to, the to will become from, right? So in the email in the exhibit number 1, the to will become from, the from will become to. So who is the to now? The partner. So should I copy this partner from here? See, I just copy Control C and I come to my Word file and I put Control V, to. See how easy that is? From, I press Control C, from, the to becomes from, and I come here from manager. Subject, I copy the subject as it is, Control C, I put the subject, Control V. See how easy that is to save time in a computer-based exams? No, Kashifullah, please don't be worried about date. Just leave the date blank. It's not a big issue here, right? Don't keep the paper date over there. Just ignore the date, right? I've been so clear on that. I don't know why people are asking questions like such. Is everyone clear how I copy pasted to, from, subject? Right? Date. Introduction. Now, what's the introduction? Quickly. See how quickly I write it. I know the requirements, right? The purpose of writing, let me increase the font size. The purpose of writing, so you can see this. Just let me increase the font size to heading 2. I hope you can now see this, right? The purpose of writing this briefing note is to evaluate the business risk. See how I cut shorted. Business risk of material misstatements. The purpose of writing this briefing note is to evaluate. I can just put a cross here. is to evaluate the business risk and risk of material misstatements, full stop. Further, this briefing note includes audit procedures on grant, matters for accepting new client, and suspicious fraud. Full stop. See, introduction is the purpose, but you have to keep the purpose short. Examiner says student write almost half a page introduction. So see, the purpose is to do this, comma, this, comma, this, comma, this, comma, this. Have I just make a concise introduction, telling examiner I have to do the 5 things? Is my introduction telling I have to do the 5 things? Look at this. But is it short? Is it shortened? I cannot just write everything as it is, right? Very concise. The introduction has to be very concise, just like 1 to 2 sentences. Now, what you're doing in A, you all remember what you have to do in A? So you quickly write A, business risk. Quickly write A, business risk. What to do in B, risk of material misstatements. What to do in 3? Am I reading the exhibits? No. C, procedures on the grant. What I need to do in 4? Matters for new client, something like that. And 5, suspicious fraud. Ignore the spellings currently, right? Suspicious fraud, and you come to a conclusion. Can I write the conclusion now? No. Till the time I wrap up my answer. So I need to wait for a conclusion, right? When I wrap up my answer. But how much time will this take to set up? You need to set up this before you get to exhibit 2 and 3. So once you read the exhibit 1, yes, you will write A, B, C, D in the exam paper, right? Because that's the requirement of the question, right? You will write A, B, C, D in the exam paper. Everything I'm writing is exactly the same way you have to write. Is everyone clear that you read the exhibit 1, and after the exhibit 1, you made the briefing note ready? Is that clear to all of you? How much time will this take to make the business briefing note ready? To me, it should be 5 minutes. In 5 minutes, you just make it ready. And in how much time you will read the exhibit 1? 3 minutes, 2 to 3 minutes. Yes, you will get 4 professional marks, not just for the layout, Simran, but also for what you write inside the briefing note. I will be guiding you about the clarity of professional marks. Don't be worried about it. Headings can be in uppercase, no issues. Headings can be in uppercase, but what you write under the heading should be in normally how you write a sentence, right? Starting with a capital letter and then going to the small letters, right? Is that clear? But headings can be in capital letter, right? So is everyone clear with the order? Now, once you have completed the briefing note, you will cross the briefing note, you close the briefing note, everything gets saved automatically. So you see clean surface in front of you. Then I'll open the exhibit 2, meeting notes. Can you see the meeting notes in front of you? Exhibit number 2. Can you all see this? Exhibit 2 in front of your screen now. Now you start reading it. Now see, I need to give you one very good advice. Listen to me carefully. When I was reading the partner email, which color I used for business risk? Green, right? And which color I used for risk of material misstatement? Pink. That was with purpose, right? Now, when I read the exhibit 2 and exhibit 3, will I come across business risk as well as the ROM? When I'm reading the exhibit 2, will I come across business risk and ROM? So how should I annotate? I should annotate all the business risk in green, and I should annotate all the ROMs in pink. Will that help you later when you are going over your annotations? A lot of time, students are very bad at annotating. You should be good. How many colors of highlighters you have in exam C? 1, 2, 3, 4. You have 4 colors highlighter. Why? Why is the examiner giving you 4 color highlighter? He could have given you one. Think. thing. Why is the examiner giving you 4 color highlighters? Could have given you 1 just to segregate. Is that a good advice, using 1 color for business risk and 1 color for ROM? Will that help you when you're annotating? Good, very good. Okay, let's do this. Just one exercise. I'll move back to my PDF file, but I just want to spend 5 minutes quickly here before I exit from the platform for today. I hope you got some relevance of the platform today, and we'll keep adding it every day. Okay, suppose you're reading the exhibit number 2. Green is for business risk, right? Okay, business background. Redback Sports Company operates 20 sports and leisure centers around the country. So they have 20 sports and leisure centers around the country. Size of the business. Each center has a large gym and a swimming pool, and many also have a tennis and a badminton court. Given the nature of the company, it has to comply with health and safety regulations. It has to comply with health and safety regulations set by the national regulatory body. Do you think this is a business risk, compliance with laws and regulations? If the company fails to comply with laws and regulations, can it be penalized? Can the license of the company get cancelled? So is it a sort of a business risk here that the company has to comply with health and safety regulations? I'm just giving you a 5 minutes overview of the green and pinks, right? And I'll just move out of it and get back to my PDF. But I hope you get the relevance of greens and pinks, right? Okay, you need to comply for the health and safety requirements in order for retaining your operating license. So what's the business objective here? If you fail to comply with health and safety regulation, what will happen? What is the business objective? It is not speculative, Adil. It's given in the case study. Anything given in the case study, how can that be speculative? We need to be skeptical to find risk from information given in the case study. The information in the case study is saying health and safety regulation. How can we find the risk? Risk is only find if you think negative. You think negative and you find a risk. If you think positive, you cannot find risk, Adil. I hope you're getting my point. So how is this speculative? This is not at all speculative. What is the objective? Retain its operating license. So what is the adverse effect? Adverse effect will be, if you fail to comply with laws and regulation, you will lose the operating license, right? And if you lose the operating license, it will question the survival of the business. It will question the going concern of the business. Am I right? So at times the objective is given in the case study. Move next. The company is not listed, fine, and therefore does not need to comply with the corporate governance. Wonderful. However, the company's chief operating officer and the chairman consider corporate governance as a good practice on a voluntary basis, and they do have independent input on the board, and there are 2 non-executive directors on the company. So do they need to comply with corporate governance? No. Are they listed? No. But is the chairman doing it on a voluntary basis? Is that good? Is that bad? That's wonderfully good, right? They do have 2 non-executive directors on the board, and that's wonderful. One of the non-executive director is a leisure industry expert. The second one is an expert in some other organizations. Leave that out and full stop. To me, this is a very favorable paragraph. This is telling us that even though the company is not listed, they're still complying with the corporate governance regulation, and they do have 2 non-executive directors on board, which is wonderful. You move next. No, chairman of a rival company is not an issue. You can have a chairman of a rival company as your non-executive director. That's not an issue. Move next. The company board has approved a plan to expand through acquiring other leisure companies. So they have a plan to expand future, right? They have a plan to expand future. The strategy is not likely to be implemented for another 2 years when the board is likely to have the first acquisition. Ultimately, the board would like to seek a flotation of the company within the 5 years, and they consider and expanding the company would improve profit and make stock exchange listing more feasible. Is there a risk of a management bias? The board likes to see the flotation of a company next 5 years, and they want to see better profits before they get to listing. Is there a risk of a management bias here for the upcoming flotation? So for the next 5 years, will they continue to spoil their books to make the results better? Which color? Pink. Risk of management bias. Risk of management bias. So you read this way, and wherever you get a risk of material misstatement, you color that with pink. Wherever you get a Business risk, you color that in green. Is that getting clear? I'm moving back towards my normal PDF now. Now, one thing you can do last, you can keep your briefing note open in the exam like this. Now, when you find a business risk, comply with health and safety regulation, you copy this small statement, comply with health and safety regulation, you copy this, and you come to the business risk heading, A, and you put it over here, comply with health and safety regulation. So will it become a heading, comply with health and safety regulation? And can you write under this heading to score 2 marks? So you can copy the theme, you can copy the conciseness here, not the full green sentence, just a part of this, so you know what exactly is a business risk. So if you keep copying, pasting from this file to that file, it will help you. Next, flotation of the company within the 5 years. Is that a risk of management bias? Can I copy this? Control C. Can I put the flotation under the risk of management bias? Business risk, sorry, ROM. See, I copied this under the ROM. So when you are reading the exhibit 2, you find a green, you find a pink. You read an exhibit 3, you find a green, you find a pink. So every green comes under the heading of a business risk. Every pink comes under the heading of ROM. How many business risks you need to find? 4. So if you found 4 under the heading of business risk, you're safe as a student. So are you getting some approach of the practice platform today? Because I'm moving out of the platform now. Are you getting some practice today on the platform? Right? Are you getting this direction of using a different highlighter for a business risk and a different highlighter for a ROM? Are you getting how to structure the briefing note? Are you getting how to use the exhibits, in which order to use the exhibits? Okay, and we will do this on a daily basis, right? So imagine by the end of the webinar on day 5, how much knowledge will you have about the platform? I will still guide you about the scratch pad. I will still guide you about the calculator. I will still guide you about how you go about writing the answer on your platform, right? Okay, now just let's move out of this context and I go back to my Word file, and we just need to ensure we can write the answer in the session today. And everything you write on your practice platform gets saved, right? So in the exam, if you cross a window, everything is saved automatically. Okay, let's get back to my Word file and let's start writing the answer now. Okay, let's brainstorm the answer. Brainstorming of the answer for December 18, question number 1. Let's do that. Is everyone ready for this brainstorming? We had a bit of it, but we are doing it more from the PDF now, normal. Okay, can you see the December 18 normal question paper on your screen now? I'm off the platform. I'm off the platform for the class today, session today, sorry. Okay, normal paper, right? Now, what you do normally, you read the introduction. Have I informed you this is the introduction? You also had the introduction on the platform, right? You read the introduction first on your screen, right? And after the introduction, you come down reading the requirements. Have you read the requirements A, B, C, D from the platform? Yes. Okay. Then were we reading the exhibit 2 on the platform? So should we start from here again? And have we identified the first business risk? We find the first business risk, that was the company operates in. Okay, the first business risk we found here was, given the nature of the company's operation, they need to comply with health and safety regulations. So which color highlighter should I be using for it? I should be using a highlighter, which is, okay, just let me go with green here, right? Green. Okay. Next risk we found. I'm not taking any risk from the second paragraph. If you want to take something, it's your option, right? Moving to the third paragraph, we found another risk that the company would like to have a listing in the next 5 years. And we thought that this is a risk of management bias, right? Then we move to the next paragraph. The company has a small internal audit department which reports to the finance director, as the board does not have an audit committee. A small internal audit department equally is a business risk and equally is a ROM. Agree or disagree? A small internal audit department can also cause a business risk. I will explain that. And a small internal audit department even cause a risk of material misstatement. Agree or disagree? Agree. So should I color it both? Small internal audit department. Let's keep that in yellow because it's equally both. Let's use it in yellow because it's equally both, right? So yellow means both. The company offers a membership scheme whereby for annual subscription, member can use the facility of the center, right? So you offer memberships, annual memberships. Customers who are not members can access the centers for a day under the company pay as you go plan. The membership accounts for 85% of the company's revenue. Do you think there is a risk of revenue recognition because the members pays an annual subscription for the facilities? And should the annual subscription be recorded as a revenue immediately? Or should we record the annual subscription as a deferred income and then release it over the next 12 months? Release it over the next 12 months, everyone? So do you believe the annual subscription can increase the risk of a revenue recognition? Because the management can record the revenue immediately rather than recording it as a deferred income. So is there a risk of is there a risk here? Should we highlight it as what, pink? Should we highlight it as pink? Yes. Should we highlight it as pink? Yes. Right. So let's go down this with pink. This is a risk in under IFRS 15. You go down and you find the next one. Business development in this year. The industry is competitive. Do you believe a competitive industry can be a business risk as well? In a competitive industry, there is a lot of pressure on your market share. There is a lot of pressure on your profit margins. In a competitive industry, there is a lot of pressure. If you do something wrong, the competitor will take advantage of it. So industry is competitive, to me, is a business risk. I hope you all agree with me before I justify my point. Okay, and you read the rest of the paragraph yourself. In June 20X8, I'm reading the next paragraph, the company opened a new coastal center, which is offering scuba diving and other sports facilities. So they've opened some new centers, which is good. An investment of $12 million was made in the gym equipments. Investment of $12 million made in the gym equipments. Is this a ICE 16 requirement, capital expenditure? A $12 million investment made in property, plant, and equipment? Is there a risk that some of them could be a revenue expenditure which needs to be expensed out, and some of them is a capital expenditure which needs to be capitalized? $12 million investment in gym equipment. What about useful lives? If the management defines the useful life of the gym equipment strongly, can there be some understatements of the depreciation expense with the gym equipment? So is this a potential risk under ICE 16? Everyone? Right? So is this an ICE 16 requirement? Should I highlight this in pink? Okay, good. You move down. An advertising campaign has been launched to promote the company's brand. That's good. To make customers aware of investment. It is a competitive market, right? And in a competitive market, advertising campaign is very important. So the company is advertising, good. As part of this campaign, the company paid $1 million. The company paid $1 million to a famous athlete for a 2-year period. So this $1 million for you pay to an athlete, should you recognize this as your expense immediately? Or should you recognize this expense over a 2-year period? Should this be recorded as a prepayment? Should this be recorded as a prepayment for the next 2 years? So $1 million, should you expense this $1 million, 0.5 million this year and 0.5 million next year? Should it be taken to expense 0.5 and 0.5? What if the management is taking the whole to the expense? Will that understate expenses? And what if the management is taking the whole to the prepayment, the entire 1 million? Will that overstate the prepayments? Because out of the 1 million, 0.5 million will be expensed out and 0.5 million will be recorded as a prepayment, right? So can management do something wrong with this prepayment recognition? What if the management treat the entire 1 million as a prepayment? What if the management treats the entire 1 million as an expense? So is this another ROM, pink? Okay, Redback is involved in government initiative and the company received a grant of a $2 million. Do you believe a grant of a $2 million is a ROM because you need to recognize a grant? And the grant is for 3 years, right? Look at this, the grant is for 3 years. So should we recognize this as a deferred income over a 3-year period, everyone? So many ROMs, some with materialities, some with no materialities. Next, a new data management system has been introduced, which integrates membership information with accounting software. A new management system, new data management system has been introduced, which integrates management information, member information with accounting software. So is it connecting with the accounting software? Is it important to the auditor? Yes. A new data management system. Can it result into a ROM if it is not integrated well with the accounting system? Can it cause problems in revenue recognition because it has the membership information? So can revenue be recorded wrongly because of this new system integrated with the accounting software? Everyone? Right? And a new system, can it be a business risk that the staff is not well trained on the new system and it causes errors and problems in the new system and it causes wrong membership information? And if you upload a wrong membership information, will the member get disturbed with it? If you put a wrong membership information, can it result into sending wrong information to your members? So equally, I think it is a business risk as well as a ROM. So you can take this new system as a business risk or as a ROM. So I should color this as yellow. Okay, you go down. Next page completes the exhibit 2. See in the exhibit 2, how many risks have we found? We found lots of pinks, few greens, and some equally both. Okay, let's go down and read the exhibit number 3. Look at the exhibit number 3. You never get a question number 1 without financial statements. Agree, disagree? You never get a question number 1 without financial statements extracts. Now I'll show you how will you get the extracts of the financial statements in the future exams, right? Yes, in September 21 exams, sometime I think in some of the countries, students were given the dashboards, right? Like the inventory holding period. I'll just come to that. Now look at the extracts. Can you see the revenue rising a lot from the last year to this year? Is there a risk that the revenue is wrongly recognized? Is there a risk that the annual subscriptions have been recorded as revenue immediately? Is there an increase in revenue a lot from the last year? You can find a percentage. Grant. See, has the company recognized the grant as income immediately? Is that a big risk? Have they recorded the 2 million as an income, which is wrong because this grant was for 3 years, right? So this number 1 will become a ROM. Number 2 is also connecting with ROM. Your operating margin has increased from 10.7 to 15. Is that a significant increase in the operating profit margin? Can there be a risk that you have understated the expenses or you have overstated the revenue for a better operating profit margin? Is there a risk of a management bias in operating profit margin, everyone? Right? The examiner is not asking for analytical procedures in this question, right? But at least when you have numbers, you can correlate the numbers with risk. You can correlate the numbers with risk. Okay, leave aside the profit before tax. Capital expenditure, we know the $12 million capital expenditure. We already talked about that $12 million capital expenditure, right? Because that $12 million capital expenditure needs to be recognized as revenue and as capital. We talked about that. Cash, look at the cash going down. Is that a business risk? Cash going down, is that creating a liquidity problem for the business? Green, finally. Is that a big problem? The cash position, is that a big problem? Your cash is going down despite the revenue rising. Your revenue is rising, your profit is rising. Your cash is going down. Does that mean you're over trading as a business? You're over trading as a business. Is over trading a business risk? Yes. Your cash is going down. Liquidity problems. Next, leave aside the total assets. Examiner gives the total assets for finding materialities, right? Examiner gives the profit for finding materialities. The profit before tax is given for you to find the materialities, right? And the profit before tax is given to find the materialities. The total assets is given to find the materialities. I hope you all agree with me, right? Okay, the number of sports centers have increased from the last year. Last year, they had 18 sports centers. This time, they had 20 sports center. Last time, the number of members they had is 33,800. This time, the members they have is 38,000. So the number of members have increased. Pay as you go, which are not members, right? Which are not members, but they can use the club facilities, pay as you go. The number of pay as you go have increased from the last year to this year. So increase in the number of centers, increase in the number of members, increase in the number of pay as you go, right? Then you have the note numbers. The note number 1 is for the revenue. The note number 2 is income from the grant. Note number 3 is for the operating profit margin. Note number 4 is for the capital expenditure. We have already done revenue, so I'm not focusing on the revenue, right? I'm only focusing on the note number 4 down, because note number 1 is also telling you the same which we have read above, right? The note number 2 is telling us about the grant. We've already focused on it. The note number 3 is telling you about the breakup of the operating expenses. So the staff cost has increased from the last year. Marketing has remained the same. Marketing has remained the same. So I think the $1 million they've paid to the famous athlete is more likely recognized as a prepayment in total. Should you believe the marketing cost should increase from the last year by at least 0.5 million? Because they paid $1 million to a famous athlete, and the marketing cost is the same from the last year. Should it increase from the last year? So does that means that the entire $1 million has gone to the prepayment, when only a half of it should go to the prepayment and half should go to the expense? Everyone picking up? So should I highlight this in pink? Right, very good for telling me the right colors. Maintenance. See the amount of expenditure which has gone on maintenance. You are in a competitive industry and your clubs have to be up to date. If your clubs are not up to date, will the member come to your club? The member will go to a competitor. So you need to incur a lot of maintenance expenditure to keep your clubs up to date. And that is one of the reasons your cash has gone down even, right? Okay, now look at the note number 4. How many risks we have in the note number 4? Can you just read this note number 4 in 1 minute for me quickly? Can you just read the note number 4 in front of your screen quickly and tell me how many risks can you find in the note number 4 from here to here? And are they the green risk or are they the pink risk? Are they the business risk or are they the ROM? Quickly. Two right. Two of them. They got a 30 million loan. And this loan is to be repayable at a par of 34 million. Is this loan acquired on a deep discount? Is this loan acquired on a deep discount? So we have to pay this loan at 34, but we got this loan at 30. So what is $4 million? Is $4 million the finance cost, which is to be amortized over the next couple of years? Do you believe $4 million is the finance cost, which is to be amortized over a 10-year period? So have you got this loan at a deep discount? Yes, IFRS 9. And you got a $1 million loan. Is this a related party transaction? $1 million loan. And what if the management has not given a disclosure of a $1 million loan? Right? Let's wrap up the answer. 5 and 6, you can read it on your own. There is no issues in 5 and 6. Okay. Now let's go back to the word file and be with me, right? Just not I forget something. Now, When I was identifying the ROM from the paper, and I need to give you an answer of a significant ROM, let's see how many ROMs have we found and in which order. Now, I think the ROM we found from the case study, if I just remember them, the first ROM we found in order, just let me go back and confirm one thing from the paper. The order of the ROMs we found. I think the first pink color we got in this question was the potential listing on a stock market, right? That's the first pink ROM. Okay, good. Okay, now let's do something. See, when I read the ROM with you top down, this is exactly what you do in exam, top down. Let's see how many ROMs we got top down. The first ROM we got is a potential listing on stock market in next 5 years. Agree? In next 5 years. Does it have a value? How many marks will I get for it? 2 or 3? I get 2 marks. Down. Next. The next I think we got is the small internal audit function. I hope you agree with me. There was a small internal audit function reporting to finance director. That was the next in order. So is this a potential ROM? Means weak monitoring of the controls. 2 marks, 3 marks. 2 in the order. In the order. I'm not still justifying is it a significant risk. I'm just trying to write the risk in order. Next, the annual subscription. The annual subscription from members, right? Was that the third risk? Plus revenue has increased a lot from the last year. Increased a lot from last year. I hope in revenue has increased a lot from the last year, right? You can just identify that point from the exhibit number 3. The annual subscription. No, there is no materiality for annual subscription, right? Revenue itself is a parameter of materiality. You find materiality on the basis of revenue, right? So in the exam, no, 85% of the revenue is like just a breakup of it, right? There is no value. So annual subscription, you will write the accounting treatment, you will write the risk, you will write the impact. 85% means you can just tell examiner that 85% is this much. You will not find the materiality here, right? So you will be scoring 2 marks according to me here, not 3. Revenue has increased a lot. Where is that written? Revenue has increased a lot. That was in exhibit number 3. Next in order. $12 million investment. $12 million investment in the new gym equipments. In the new gym equipments. Is there a value here? Yes. Can I get 3 marks here? Can I get 3 marks here because it has a value? Yes. $12 million. Next. $2 million grant. $2 million grant. Can I get 3 marks here because it has a value? Yes. So how many comments on materiality have I done so far, everyone? 2. Good. Next. The next I got was the new system. The new system. How many marks will I get on the new system? 2. Good. Next. Then I think the exhibit completed and we went to the exhibit number 3. In the exhibit number 3, we got operating profit margin rising from 10.7% to 15%, right? This is what we got from there, that operating profit margin was rising from 10.7 to 15%. Can I club this point with a potential listing on stock market? Can I club this point with a risk of a management bias? So can I just connect this 0.7 with 0.1? I will not develop a separate points. I'm writing here 0.1 and 7 will go together to create a risk of management bias, to create a risk of management bias. Am I right? So is point number 7 an indicator of a management bias, which is helping the point number 1, everyone? Are you getting my point? So no separate marks. A risk of management bias. So point number 1 will fetch no extra marks because I club it with point number 1. So no marks. The next in order was a $30 million loan to be paid in 10 years at $34 million. So was it a deep discount loan? Deep discount loan. Do you need to write an accounting treatment? Do you need to write the materiality of a $30 million? Because this is what you got: 30 million, 2 million, 12 million. So will I have a materiality of a deep discount loan? How many marks will I fetch here? 3. Now, is this my third comment on materiality? Tell me. Is this my third comment on materiality? And what is the maximum marks for commenting on the materiality? What is the maximum marks for commenting on the materiality? 3. Have I attained all 3 of them in the top-down manner? In the top-down manner, have I attained all 3 of them? Yes. Now, the 4th time I comment on the materiality, will I get any marks? No. What was that? $1 million. I think I'm just let me confirm one thing. We got something off track here. We got after the $12 million loan, we got $1 million paid to a famous athlete. Sorry, $1 million paid to a famous athlete should have come first before the grant. $1 million paid to a famous athlete. Sorry for that. You should have reminded me that there is another point we're missing in the order. See, I remember that. $1 million paid to a famous athlete. Will I get 3 marks here? Does it have a value, materiality? Right? Does it have accounting treatment of recording it as a prepayment? Does it have a risk? What if the management has recognized the whole amount as a prepayment? Right? So will I fetch 3 marks here? Yes. Now tell me, have I got my 3 maximum marks for materiality? Look at this. Have I got my 3 maximum marks for materiality at point number 4, 5, and 6? Tell me. Now, the next time when I'm writing my point number 9, in my point number 9, now will I get 3 marks? Or even if I write materiality in the point number 3, will I still fetch 2 marks? Now, should I write materiality in the point number 9? Yes, I should. But how many marks will I get despite that? How many marks will I get despite that? 2. Is everyone clear on this? 2. $1 million. Related party. Will I define the materiality of the related party telling this is a qualitative materiality? It is a related party transaction in the point number 10. Will I comment on the materiality? Yes, I will. But when I comment on the materiality, will I get 3 marks? Will I get 2 marks? Still 2, because I've exhausted my marks on materiality. I've exhausted my marks on materiality. So I'll fetch 2. That completes the question for you. Now, how many risks we found? Almost 10. Some of 2, some of 3. Are you getting this? Now you need to choose. If the examiner says evaluate the significant risk, how would you go about it? Evaluate the significant risk of material misstatements. For example, how would you change your list? You have to practice. Practice makes you perfect, right? You need to practice this. You need to read the case studies top down in exam papers, right? You need to find a solution of improving your speeds. Nothing can be done for that. Okay, evaluate the significant risk. Now, what is a significant risk? The one which has the factors available. Have I discussed the factors with you of a significant risk? Let me recall that on your screen because you forget things easily. Can you look at these factors? Complexity, subjectivity, uncertainty, change from the last year, management bias, fraud risk factor like revenue recognition, management history of bad practices. Look at these factors. Does these factors makes the risk more important at the upper spectrum? Do you remember this? We discussed that at the beginning of the class. Now, on the basis of these, let's define which one of them will take my list up. Now, You might not lose marks if you don't demonstrate a significant risk, but you write your answer in the order of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's even fine. At least you're using an order. But if you want to be clever, you want to demonstrate professionalism, and you might get a mark extra for significant risk in the 4 professional marks. So the 4 professional marks might include a mark for significant risk. Definitely will include it. You might lose that 1 mark, and that 1 mark can be a big difference in 49 and 50. So evaluate the significant risk. I think this is how it should look like if I'm evaluating the significant risk in order. I think the risk of management bias should take the first position. Let's say potential listing plus rise in OPM, rise in operating profit margin, plus rise in revenue. Is this a risk of management bias for preparing for listing? Preparing for listing, risk of management bias? And do you believe risk of management bias is one of the indicator which takes your risk to the upper spectrum of inherent risk? Agree? So potential listing plus a rise in OPM plus a rise in revenue is all demonstrating that the management is doing a management bias for results, number 1. Number 2, I believe another risk which has a lot of issues is the weak internal controls. Weak internal controls. Small internal audit department. I think this is weak internal controls is a fraud risk factor, right? Weak internal controls is a fraud risk factor. It could be possible that the finance director deliberately have a small internal audit department which reports to the finance director on the basis of ensuring that the fraud can be done easily. So a fraud risk factor present, is that in one of the indicator which increases the risk? Yes. Next in order, revenue recognition. Revenue recognition. Do you believe revenue recognition is a very specific inherent risk, the one which has a fraud risk factor present? Is that one of the potential risks that you can record revenue wrongly? Next. Then I think we had no other risk like subjectivity. We don't have any risk like uncertainties. New system, something new system. Change from the last year, Is that another property change from the last year as something important? Everyone agrees. Do you remember these brackets? Do you remember the brackets, everyone? Good, very good. If you remember the brackets, right? So see how I'm using the brackets to find which of the 10 are the potentials. So we got something new, right? Now, after the new ends, you can follow any order. I think the order you should follow after the potential factors, yeah? Weak internal control don't have a materiality, potential listing don't have a materiality, revenue recognition don't have a materiality, new system don't have a materiality. So how many marks am I getting here? 2, 2, 2, and 2. So how many marks have I got out of 18? Out of 18, how many marks have I got? 8. Now, from number 5, have I exhausted my list of factors? Yes. Now can I follow the order of the materiality, right? Now follow the order of materiality. Now follow the order of materiality. So in terms of order of materiality, which one should come first? The ones which have a high level of materiality. Look at the values, 12 million. Look at the value 1 million. Look at the value 2 million. Look at the value 30 million. And look at the related party transaction, which is material by nature. This is material by nature, right? $1 million is material by nature. Don't look at it as a number. Material by nature. So should I go in order? So which is the highest amount? Leave aside number 10. Leave aside number 10, which is material by nature. Which is the highest amount? 30. So should I start with $30 million, right? So next in order will be a loan. Sorry, just let's restart the number. A $30 million loan, but material by nature should come first. $30 million loan. Sorry, material by nature should come last. Sorry, 30 million loan first. Then what's next? A $12 million investment. A $12 million investment. Then the next in order is $2 million grant, $2 million grant, $2 million grant. Then the next in order, athlete and a related party transaction, both having the same amount, which should come up, definitely related party. Then you have $1 million related party loan, related party, and finally comes the famous athlete. $1 million to the famous athlete comes next. This should be the order. But how many marks will I be getting it? I got 8 marks already, right? So when I move to the next one, loan, I get my first 3 marks, 11. 12 million investment, another 3 marks, 11 and 3 is 14. Then $2 million grant, 3 marks, 17. Have I exhausted my marks of 3 now? Please tell me. Have I exhausted my 17 marks here? Yes. Now, related party transaction, I get 2, 19. I've fetched 19 marks so far. And $1 million, 2 marks. And I fetched my marks up to 21. Yes, Derek, the $4 million difference between the loan, you acquired a loan at 30 million, you pay at 34. The $4 million is a deep discount, which is to be amortized over the next 10 years as a component of a finance cost, right? Which is very right. So how many marks have I fetched in total now? 21 marks when I write the last risk. How many marks I have to attain in total? 18. Are you getting some structure of how you read top down? What is your approach as a student? Your approach as a student should be go top down. Number one, have I read the case with you top down? And in top down, we got these list number 10. Then we analyzed which are potential and we changed the listing. Are you getting some perspective? Can you do this practice at home that you first go top down and you find the risk? Then you choose which of them are significant, which of them has risk of management bias, which of them has a fraud risk factor, which of them is the change from the last year. Right? The change in the new system is that if the new system is not integrated well with the accounting system, your revenue can be overstated because your new system is integrated with the accounting system. If the integration is not right, Mohammed, so in that case, there could be risk of material misstatement in the financial numbers because it's in integration between a management system and an accounting system, right? So if that integration is not working well, it increases the risk of material misstatement in the financial numbers. See, you have to practice, then only you can fit things up in the time pressure in exam. But even in the exam, if you cannot write the risk in significance, at least can you write risk in the order of the case? Can you all do this? At least can you do the list number 1 on your screen now in the exam, everyone? Can you go in the top down manner, everyone? If even you cannot do the significance, at least examiner likes you do things in top down manner. But if some student can change the list to the order of significance, you are good. But not every student have the capability to do that in exam pressure. Only the brilliant student have the capability to do that. But have I guided you on both today? Have I guided you about top down? Have I guided you about significance? Now it's up to you what you want to do. But you cannot blame me that I've not told you the significance. I've not told you the factors of significance. You cannot tell me that the tutor didn't guide us about how to reach the significance in the exam paper. Have I made you clear on significance? Have I made you clear on the marking scheme 3s and 2s? Right. I've done Shahrukh the significance at the start of the session. If you missed it out, please catch the recording. Is everyone clear on the marking scheme? Please, quick answers. Is everyone clear on the marking schemes? 3s and 2s? Is everyone clear on the top-down approach? Can you all follow the top-down approach? Is that easier? Okay. Can you prioritize the risk if you want to? Have I given you the indicators of prioritizing? Have I guided you on the indicators of prioritizing? Right? If anyone wants to follow it, can you follow it? Right? And when you are annotating in the exam paper, can you annotate in 2 different colors, 1 color for business risk and 1 color for ROM? Will that make your life easier? Have I guided you about using of the practice platform, copy paste, writing a briefing note, structuring a briefing note? Right? Okay. just one last thing. Now, I am just winding up, but tomorrow when I start my day 3, at the start of the day 3, I'll keep 45 minutes on business risk. So we'll spend 45 minutes on business risk tomorrow. Don't be worried about it. Even if we have to take 1 hour, we'll take it. So we'll do a proper business risk analysis as we have done of ROM. And once I finish the business risk tomorrow on day 3, then we'll go to the agenda of the day 3. What is the agenda of day 3? Ethical, professional, and quality control issues, right? Is that clear to all of you? So let's do the wrapping up. Let's do the wrapping up. And I have some questions to answer as well. Look at this. Professional marks. Some of the questions are, some of the students are asking this. I just want to clarify this. How many professional marks you have in the AAA paper so far? Q1 consists of 4 professional marks. Which is for writing the briefing note. Now, I want to give you some clarity for that. I've given it so many times, but I still want to assure that we are on the right track for it. Okay, let me show you the examiner report. Okay. Can you just, can you see a PDF file, examiner report in front of your screen? Please confirm me that. Okay, I'm just highlighting one here. Right, sorry, from here. Can you just read from here to here? I'm giving you 1 minute. The pink highlighted area, please read that in 2 minutes. Because this is exactly how you get the 4 professional marks. Please read it out clearly and tell me, have you understood it? Read it out, 2 minutes. Don't be in a hurry. Every minute counts. Is that clear to all of you? Have you read it? Is the examiner telling us most of the students scored 3 out of 4? Is the examiner telling us that you should not write a full page introduction or a lengthy conclusion? Right? Is the examiner telling you that you will not be penalized for poor spelling and grammar, but a lot of poor spelling, a lot of grammar, a lot of poor spelling do cause issues, right? Remember that. But if you have, if you occasionally do a spelling mistake, that's fine. But if there are lots of spelling mistakes in a computer-based exam, examiner will penalize you for that, remember. He might deduct 1 to 2 marks from the professional marks. But if there are like occasional spelling mistakes, like 7, 8, 8, 9 across your paper, that's fine. But if too much, then fine. Okay, let me clarify you and exit. So examiner is saying 1 mark for each of the following. 1 mark for each of the following. Number 1, you will get 1 mark for a suitable heading. I'll just make clear what is a suitable heading. 1 mark for a brief introduction. 1 mark for a brief introduction, right? 1 mark for a structured answer, and 1 mark for a clarity of explanation. Now listen to me very carefully in the last 2 minutes before I exit the session. I hope if I'm taking 2 to 3 minutes extra will not bother you. Okay, now look at this. I'm just copying my answer of a briefing note from the Let me see if I can do that. Then I'll just agree with you. If I can just, I think I cannot copy within the documents here. If I can, it would be easier. Okay, yes. See, I copied my answer from the computer-based exams to my Word file. Can you all see that on the Word file now? I've just copied the things on my Word file. Just let me reduce the font size a bit so it fits the screen. Can you see this briefing note up on your screen now? Okay. Suitable heading. Can you see the suitable heading? Let's highlight suitable heading in yellow. Suitable heading is this: briefing note to, from, subject, date. This is suitable heading. 1 mark for suitable heading, yellow. Is that clear? Yellow, suitable heading. Can you track suitable heading now, everyone? Okay. Brief introduction. Let's put brief introduction in blue. Can you see the brief introduction? Is that really brief? Yes. 1 mark for the brief introduction. Good. I got 2. Structured answer. Look at the structured answer. Do I have A, B, C, D in order? Or should I write my answer C, D, E, A, B? No. Should I write my answer C, B, A, D, E? No. Structured. Can you see the structured answer? It's going in the order A, B, C, D, E. Is that a structured answer? Green. Green is the structured answer. Green. I get 1 mark for it. Structured order A, B, C, D, E. Is everyone getting that? Clarity of explanation. What you write inside A, B, C, D, and E. What do you write inside? This is subjective. That is why the examiner was saying most of you will score 3 out of 4. Now, I believe that in the future exams, let me write this tutor note for you. If the examiner says evaluate the significant risk and student don't order the answer in significance, will lose 1 mark, which is for clarity of explanation. 1 mark, which is for clarity of explanation. So that 1 mark you will lose. So I think one student was asking, will I lose if I don't write in significance? So this tutor note here, I hope you can all read that out, is extremely important. So you will lose 1 mark. But I think if you're doing a good paper, that 1 will not count. But if you're doing a bad paper, that 1 could be a difference between passing and failing. But still look at the time. If you are consuming a lot of time on significance, don't spoil other answers. So if you are good at significance, do it. If you're not good at significance, don't just put a lot of time on significance and you come out of the exam hall by incomplete answer. Right? The heading, the suitable heading also includes the conclusion, right? The conclusion is part of the suitable heading. Let me highlight that in yellow. So conclusion is part of the suitable heading, right? Briefing note, to, from, subject, date, and conclusion. That is all suitable headings, right? So yellows are suitable headings. The blues are brief introduction. The structured answer is green, and the clarity of explanation, I cannot highlight that because that's just journal. Is everyone clear with the marking schemes and discussions today? Now just let me wrap things up very effectively for all of you. Now just let me make some clarifications for today, because we started a day today, but we had a very long agenda today. So we completed a part of it, but we couldn't. Can you see this agenda screen on your screen now, everyone? Okay, now when we meet tomorrow, this is what we are doing tomorrow, right? But will there be something extra tomorrow? Yes. We'll still be discussing the business stress tomorrow, the answer, and how much time ideally I'll give to business stress tomorrow, because I hope you will remember the December 18 question by tomorrow, because I've read the question. I will not be reading the question, right? I will just be putting the brainstorming on the Word file, and then I will tell you how to write an answer. So I'll just take like 3 to 4 business risks and I'll write an answer for you, right? So I think we should keep like 45 minutes to business rest tomorrow, in which I will be writing an answer for you and in which I will be doing the brainstorming for you, right? So the first 45 minutes tomorrow will be on business risk. And then right after that, we'll keep the remaining time on ethical, professional, and quality control issues. If something is left from ethical, professional, and quality control issues, we can take that to day 4, right? So that's why we keep shifting. But hopefully, I think ethical, professional, and quality control issues will fit within the time we have tomorrow. Is that clear to all of you? Will you remember the agenda for tomorrow? So how happy you are with the session today? Just give me a quick feedback. Have you got to know something important from the session today? What is the key learning you got from the session today? Just quickly drop the message. What key learning? Just tell me one thing you got today. Best from the session. What is the one good thing you got from the session today? Just drop the message. Marking scheme or significant risk or whatever. Okay. Okay. Thank you. Okay. And did you got to know some basics about the platform today? And has that benefited you? Okay. And will we be using the platform daily basis tomorrow, day after tomorrow, and on the last day? Yes. Will that give you the right exam rigor? Okay, that's great. Okay, thank you so much, all of you. Okay, now let's sign off. Okay, thank you so very much, all of you, for your positive feedback and your response and your attendance in this live webinar to success. Please drop your feedback over the WhatsApp group as well, and I'll be sharing this presentation for day 2 with you and the recordings and the Word file sooner as I complete my session today. This is your tutor, Kashif Kamran, signing off from the webinar to success for December 21 exams for advanced audit and assurance. This was the day 2 focusing on risk assessment. I'll meet you back tomorrow for day 3, where we have a continued agenda for business risk and we have an agenda ethical, professional, and quality control issues. Have a nice day, study effectively, and ensure you have success in the upcoming exams. Take care, goodbye, and Allah Hafiz from your tutor, Kashif Kamran. Yes, Allah Hafiz, all of you. Thank you so very much for your feedback. I'll give you the time management scheme tomorrow of fun. I'll give you the time breakups and reading and planning times and writing times. I'll be putting an emphasis of that over the next 3 days, right? Don't be worried about it. So be ready for it. No, there are no other formats, Eamon, in the AAA paper, just the briefing notes, just the briefing note in the AAA paper, no other formats. It's not like an SPL paper.